welcome to NDTV Profit. I am Mahima Vachrajani. With me is Puneet Jhaveri and you are watching Ask Profit. Puneet, good day for the markets for sure, to say the least. We are well above the 25,200 levels today. Yesterday I was happy saying 25,100 level, but today I'm happy saying we're very well above the 25,200 levels. The Nifty 50 up 0.4%. The Bank Nifty also following the same, on the same lines, up 0.4% as well. The broader markets also doing fairly well, but let's try to pull up the Nifty 50 heat map, because that will give us a picture as to what are the counters that are actually leading to that gain in the Nifty. And there you go, those are the counters that are actually contributing to the entire Nifty 50. Tata Consumer, Bharat Electronics, Maruti Suzuki, Grasim, all seeing gains of about 1.4, 1.5 to almost 2.7 odd%, with Tata Consumer seeing gains of about 2.7 odd%. Some counters in the red, although, include Titan. Titan continues to lose ground, probably third day in a row now. Tata Steel down 0.6%, Power Grid, Cipla, Hindalco, ITC, some counters in the red. The broader markets also doing fairly well. The mid cap 150 almost in line with the benchmarks. The small cap 250 of course doing way better than the mid cap 150 and of course the benchmarks. But specific counters, Puneet, moving in trade, and especially newsmakers. If you take a look at the BSE 500 as well, and that's the texture of the market right now. Very stock specific. There you go. KNR Construction, LG Equipments, PNC Infra, CE Automotive. Some counters in the green, but Borosil Renewables, Britannia, NHPC, Britannia top loser on the BSE 500. Yesterday saw a decent amount of gains, but today seeing profit booking. Gujarat Fluoro on the back of that block deal promoter selling stake. But that's with regards to where the markets stand. Let's welcome in our guest for the day then. Rajesh Agrawal, Head of Research at AOM Capital, and Vaishali Parekh, Vice President Technical Research at Prabhudas Leeladhar, are joining us now. Welcome to both of you and a very good morning to the both of you. I'll take up the first question, which is from Pakshal, who is joining us from Bellary, asking about PI Industries and wants to know if he can hold for the next 2 years. Though he's asking technically if this is possible, because he's saying that if there's any chance of breaking the range in which it is trading. Vaishali, 2 years, slightly longer term perspective view, if at all you can give on the charts for PI Industries.
Very good morning, Mahima, Rajesh. Yes, so actually PI Industries, technically speaking, currently, it is at a very good support level. Now, if 2 years is the horizon, I'm looking at it, well, it is showing a double bottom formation. It's actually getting into a trend. So I would say, yes, one should hold for 2 years. But having said that, keep a stop loss of 3,500. And I think in all likelihood, we will go step by step. If the stock sustains about 3,900 levels, we are looking at a target of 4,400 to 4,800. So that's how I would trade this stock with a 2-year horizon.
Got the view, Vaishali, and good morning to you. The next question is coming in from Bengaluru. Arjun is writing to us for a long-term view on Kitex Garments. Now, he's asking for a 5-year view, but let me go across to Rajesh for this. Rajesh, very good morning to you. Thank you for joining in. It's Puneet this side. What's your view, if any, on Kitex Garments? Because it's a long-term view that our viewers asking. We've seen the garment space also in focus and textiles post the GST rate, as well as what's happening with tariffs. Any view on this one?
Good morning, Puneet. Good morning, Mahima. Good morning, Vaishali. As far as Kitex is concerned, I think the entire textiles pack as a whole is looking exciting because of various reasons of the GST cut, the FTA is being talked about, and all those things. But the thing is, Kitex is not something that can be held for a long period of time, maybe 2 or 3 years down the line. There are better choices in the textile universe, I would say, like the likes of Vardhaman Textile or Welspun, or even you have Arvind, Gokuldal. There are better choices than going for Kitex. Kitex, of course, in the short term, it can go up to 240, 250 odd levels. That's the upper side we believe at this point of time. Based on their numbers in coming quarters, we can take a call whether it should be held for 2 or 3 years time horizon. But at this point of time, at this maximum upside from these levels is to be 250 odd levels.
All right, so that's with regards to where Kitex Garment stands. We've got our next question from Bhaskara, who's writing us from Hyderabad, asking about Som Distilleries. He's got 40 odd shares at the rate of 142, currently trading at 134, and wants to know if he can continue to hold or maybe wait for some time and get back to the green levels at which he's bought in at. Vaishali, your view with regards to where charts are concerned for Som?
Currently, even if I'm looking at a longer term horizon and even on a daily chart, I think it is showing signs it's at a support level. So continue holding, keep a stop loss of 128, and the stock can get into momentum once we see this stock moving above 150. So for now, let's keep a range of 128 to 150 levels.
Got the view. Vaishali, the other question is coming in is from Amchi Mumbai itself. Malika Mehta is writing in for a question on Amber Enterprises. It's a stock that's also in focus today. They've announced a 1,200 crore QIP, and while it's not reacting that much, it is a huge fundraise for the company. Rajesh, let me come to you on this one. Valuations definitely pricey, but your view on Amber Enterprises?
You said it right, Puneet. Valuations are priced. And that's the main reason the stock had not reacted to the QIP news. Otherwise, you see the fundamentals are great. They are doing very good in AC business. Lot of PLI, lot of new orders pouring in. But the fact remains the valuations are on a high side, almost at 3-digit P. I don't believe there are much of upside left in the near future, I would say. Maybe levels of 8,500, 8,600 would be the optimum, unless, of course, the numbers start coming in a dramatic way in the next few quarters. So at this point of time, that would be the levels to watch out.
Okay. Viewers, breaking news coming in your screens right now. IT search on Marico. Mumbai Income Tax Wing has conducted survey action at company's several offices and factories. That is what sources are suggesting us. Survey operations across Marico offices, manufacturing units, major dealers have happened. And this is linked to scrutiny of certain foreign funding transaction is what sources are telling us. In fact, Shrimi is joining us now to give us more details on that. Shrimi, what are you picking up?
Yeah, so it's a developing story, and what we are picking and as we speak is that it's a full-fledged search action actually, and not survey action. Remember, survey action is just covering premises, but this is full-fledged search action by Income Tax Department Mumbai Wing, and what we are learning at this point that it's across the Marico location, including offices, their manufacturing units, and in fact major dealers which they deal with. And according to initial information, what we are understanding at this time that it is linked to scrutiny of certain foreign funding transaction, and in fact a team of officials have been deployed at several premises to examine Marico's financial records and trying to gather evidences. And what we are also learning here is that department is in recent months intensified its focus on cross-border funding, compliance and disclosure norms. And there are certain, leads department has on the potential irregularities in the capital flows as well. And what we are also learning at this point that the current action at Marico, adding to a series of similar survey and search action across the prominent corporates in FMCG and consumer goods space. But since it's a developing story, we are just hearing that it's just not survey. They are actually having a full-fledged search action on Marico.
Okay, Shrimi, thank you for bringing us those details. Viewers, we'll keep you updated on that story. It's a developing story, as Shrimi mentioned, and we'll have to wait and watch out for as to what is the outcome of this search that's happening. All right, coming back to the queries, Gaurav Baheti is asking the next one. He's writing us from Hyderabad and asking about Bank of Maharashtra. He's buying prices at 56.45 and got 415 in quantity. Wants to know if he can so basically he's saying he wants to exit by this month and wants to know how high can the stock go from the current market price. Vaishali, on the charts, what do you suggest?
On the chart, so this has already shown a very good bullish candle. Keep a watch at 57, 58 levels, and that's where we are. If it shows resistance, because today's volume is also quite high, if it moves past 57, 58 levels, we can see the stock going towards 60. So short-term basis, 60 should be ideally the level, but keep a trailing stop loss and look for the target.
Okay, all right. So that's the with regards to where Bank of Maharashtra is concerned. But the other new listing that is in focus today is Shingar House of Mangal Sutra, and the kind of listing gains that we are seeing right now. It's cooled off a tad bit, but still seeing gains of about 11%. To take us through what are the future plans for the company, we are joined by Chetan N, who's the CMD of Shingar House of Mangal Sutra, and Vraj, CEO, the director and CEO of Shingar House of Mangal Sutra, joining us now. Welcome to both of you, gentlemen. Vraj, I'll take up the first question with you. First of all, congratulations to the both of you on the stellar listing. Just want to understand from here on, I wanted to you understand the trajectory of the total borrowings that you have on your balance sheet. You've not said that any of this fund will be used for reduction of debt. It will majorly be used for working capital requirement. Any idea on debt reduction?
So I would like to emphasize on this that currently company is not planning to have any debt reduction. We are the expansion plans we have. So keeping that in mind, we would like to keep the debt maintained as it is, and also increase the working capital through the medium of the IPO as well.
Okay, Viraj, in terms of the total revenue in the past 3 years, we've seen it grown from a 950 crore to almost 1400, over for that 1400 crore. Just want to understand that from here on, what are the targets looking like when it comes to the top line and your bottom line? What is the kind of, let's say, growth CAGR percentage that you're looking at?
So if you see the last 3 years records, there has been a decent substantial amount of growth in terms of the revenue as well as profits. And after this IPO and the growth we are planning, we would be maintaining the same range of growth, and will be thriving and working hard towards increasing it and going in even further. As the customer base we have, the support we have from the industry, our customers, and the growth plans they have in future. So to be with them and to go ahead hand in hand, I'm sure we will be able to maintain the growth as it has been through the years.
Chetan, what is the demand looking like? Just want to understand for your product especially, because from what I understand that because of rising gold prices, we've seen that the buying trend right now is for lightweight jewelry. So even in Mangal Sutra, I believe that people would be moving more towards Mangal Sutras which are lightweight. What is the demand trend looking like? And secondly, your thoughts about the rise of lab-grown diamonds. Will you also be incorporating them in your products?
यस मैम, पहले तो मैं आपको बता दूं कि राइट नाउ मंगलसूत्र मार्केट इज अप्रॉक्सीमेटली 17 to 18,000 crore in India, and research says that in 2032 it may be above 30,000 crores. So again, you are very right, gold price is going higher and higher, but the demand of Mangalsutra is remains same,
right?
Because this product is a regional product.
Got it.
के साथ चलता है.
Got it, Chetan. Thank you so much. Well, Viraj and Chetan, thank you so much for taking out the time and speaking with us at NDTV Profit. Shifting to other listing that is in focus today, up 66%. The listing gains are quite significant for something like an urban company, and Agni is speaking to the management. Listen in.
21, our net revenue from operations was about 248 crores. That rose to 437.6 crores in FY22, then about 636 odd crores, 828, and eventually 1144.5 in FY25. So from 248 crores about 4 years back, it rose to 1144.5 crores in FY25. We had about close to 6.8 million, 68 lakh annual transacting users in FY25. These are users who did at least one transaction. We also disclosed in our DRHP and RHP that nearly 82% of the business in FY25, 82% of the net transaction value came from repeat users who were acquired prior to FY25. And that number in the first quarter of FY26 rose to above 85%. So it's a repeat business. It's a business of trust. We have to be hard at work to train and upskill our service professionals, to give them the right tools, the right technology, the right SOPs, the right processes to really delight our consumers so that those consumers can keep coming back to the Urban Company platform and keep transacting with us.
So when we say recurring, you say recurring means what's the frequency there?
Sorry, no follow-up questions. Thank you. We'll take one question at a time.
Hi, congratulations. This is Shilpa here from CNBC.
Yes.
Stellar listing, so huge congratulations.
Thank you.
There. Just quickly touching.
All right, so that was the management of Urban Company. In fact, Puneet, I mean, it's cooled off a bit, but 67% for a new age tech platform. I think that's the way ahead, it seems.
Yeah.
I mean, of course, it's turned EBITDA positive in FY25. Of course, the profits that were shown, the bottom line, of course, did include a large chunk of it coming in from the deferred tax. But let's see as to how 26 shapes up, because that will give us a picture as to whether the company will be able to actually, get into that profitable territory.
Because the valuations are actually not that cheap, right? Because if you take that, and now with that 60% premium, I think you'll put together the numbers of what that looks like as well. But let's actually ask Rajesh also this about it. Rajesh, thank you for patiently waiting by. Your view actually on both the listings, but specifically also on Urban Company. Do you think that right now it's gotten way too expensive because of this listing gains?
Purit, I think today is a good day for all the new listings. All the three of them have listed on a premium. And Urban Company has gone up to 70-75%, if I'm not wrong, listing gains. The operations has been strong. As the management said, that the repeat business is there, the beauty and cleaning, not only in India, but they're doing into Middle East also. They're selling their own products too. But the thing is, the valuations are too high. If you look at the numbers, the first quarter earnings came to just 5 paisa. So trading at 170 odd rupees, you can imagine the kind of valuation it's commanding. It's almost, if I'm not wrong, around $3 billion odd at this point of time after the listing. So the valuation is huge, I would say. I don't know about the market, it can push up to around 180 or 200 odd levels, but I am very skeptical at these valuations. I would suggest a booking of profit if somebody has got the allotment.
Rajesh, and you're not wrong in saying that the valuations are expensive. I was just telling Puneet that it's 16 times price to sales now at that 60% premium listing. And if you take a look at these other platform companies, they're still trading at 8 to 9 times. I mean, so it's double of, almost double of these platform companies' valuation. So yes, valuation is not looking cheap for sure. But let's take up the next question then, which is from Chanukya, who's writing us from Hyderabad, asking about RVNL. He's got 700 odd shares, bought at 337 a piece, holding since the past 3 months and wants to hold for another few weeks. His target is around 380. Vaishali, do you think that's achievable?
So, well, the stock has already got into a trend. So, yes, in fact, even we have recommended this as a trading strategy. So, if he's holding, I think keep a stop loss of 345 and 380 is the tough resistance. So, all going well, this is likely to go towards 380, but 345 stop loss is a must.
Got the view, Vaishali. The other question, it's an international query coming from Florida, USA. So thank you, Harin, for writing in to us. He has a question on Adani Green Energy. He's bought it at a price of 1,046 per share, and he's asking for a 4 to 5 year time horizon. So Rajesh, let me come to you. While it's a long-term view that the viewer is looking for, any specific view that you have on Adani Green with the advent of renewable energy as well as the increased order book as well? Any view on the same?
See, the fact remains the government is focusing on renewable energy, reducing the carbon footprints and all. And these kind of companies going forward has huge prospects, I would say. As far as Adani Green is concerned, with the kind of capacity, with the kind of order book, I think long-term looks very bright. By any chance, if it falls to 950, 940 or levels, that would be a good adding point. Somebody holding at this point of time can continue to hold.
Adani Green is also a part of the Adani group of companies, and so is NDTV Profit. We've got our next question from Raghu, who is writing us from Mysore and asking about Max Healthcare. He's got 100 odd shares at the levels of 1174. He wants to hold this from a longer term perspective for the next 5 years. Is that the right thing to do, Rajesh?
Yes, one can continue to hold. Healthcare as an space is looking very exciting. Not only Max but other players too. With the kind of bed to patient ratio in our country, with the kind of focus on medical insurance going forward. Organized players are looking very exciting. They are expanding their capacities, and not to forget the foreign medical tourist arrivals in our country, which are fueling the growth. I think Max is a good choice. One can continue to hold.
Got the view, Rajesh. The other question that's coming in on is a company that's been in focus, Apollo Microsystems from the defense space, and Chandrasekhar is asking us for a long-term view. What could be what is the recommended price essentially? Because he's looking for a buying recommendation on a stock, so he's not entered the stock yet. Rajesh, do you have any coverage on this one, and what's your view?
See, it's a defense company, no doubt on that, and doing very well. The order book is good, but it's a very small cap company, I would say. And when you're looking at long-term horizon, by long-term I mean something anywhere with more than 18 to 24 months, then you shouldn't be worried about 10-20 rupees here and there. So if you are planning to buy, you can go ahead, go long and term. If not in a lump sum, go by a staggered manner. 300 would be a good levels to look at.
The next question is from Govind, who's writing us from Hyderabad. He's asking about Action Construction and wants to invest 2 lakh rupees in this particular counter and wants to know if this is the right time to enter or not. Vaishali, do you think this is the right time to make an entry into Action Construction?
Let me just have a look.
Sure.
So I think Action Construction currently at 1114. I think why not? Because stock is showing signs of improvement. And I would observe a range of around 1050 to 1150 for now. And we go step by step. 1250 is an actual resistance level. Once you see the stock moving above this and sustaining above this, then I think it's ready for an upward trajectory. So for now, the risk-reward ratio is pretty favorable to get into a buy trade.
Got the view, Vaishali. The other one is coming again, another international query. So Rajesh Maheshwari, thank you for writing in to us from Singapore. He's asking a question on Tata Steel, roughly holding about 1,000 shares of the company at 125.5. So he's gotten it at a decent price just before we started seeing that uptick on all these metal counters and steel counters. He's asking a short to medium term outlook for this one. So let me come back to you, Vaishali, on this. Do you have any sustained momentum on Tata Steel going forward as well?
I think, the stock can do 177, 180 levels because it's already in a good trend. And after a good consolidation, the levels are still intact. So I would say with 165 as stop loss, this can go towards 180, 182. That's it.
Okay. The next question is from Suman, who is writing us from Kolkata and asking about Reddington. She's got total number of shares, that is 160 at an average price of 269, and wants to know if she can take some profits and maybe shift to some other counter. Vaishali, we saw a significant rally in the counter yesterday. Your view with regards to whether the momentum is still constructive on the charts or whether Suman should book some profits and go to some other counter? If yes, what would that counter be?
In fact, it has just come out of its trading range, and I think continue holding because if bought at lower levels, this stock is likely to do 333.40. So yesterday, of course, it was a very strong up move. We can see some consolidation happening, but 270 should act as a support, and right through this can go towards 330.
All right, Vaishali and Rajesh, thank you so much for taking out the time and giving us those insights. Viewers, time to slip into a very short break, but don't go anywhere. We have a conversation lined up for you, especially with Chris Woods on the other side of the break.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello, Moto.
Thanks for tuning into this very special broadcast. And at the point of time when the India-US relationship seems to be thawing, if I can use that term, and people would want to know about what is it that some of the biggest global voices will be thinking about this, about the reforms, GST reforms and others, and the markets ahead, particularly in a year when the Indian markets, contrary to the past, have moved sideways. You can't think of a bigger and a better voice than Christopher Wood, Global Head of Equity Strategy, Jefferies, Tamanna.
Absolutely, and we're pleased to welcome him on the conversation with us today. Chris, great to have you with us here on NDTV. Thank you so much for your time. You know, I'm recalling your comments, and because we started the conversation in the context of the India-US relationship on your last note, where you talk about, and you call it out quite clearly, that perhaps what President Trump is not too happy about is not getting credit, what he sees as credit, for solving India-Pakistan or the ceasefire. Do you think we've moved some miles away from there?
Well, yes, the sort of vibes suggest we've moved a bit beyond that. So I think it's perfectly understandable why people's expectations that some kind of deal can be agreed have improved. And there's got to be, I would say, a 50% chance that something's agreed in the next few weeks, months.
Wow. Chris, in which case you couldn't have chosen a better time for your conference, right? I mean, what's the mood now? The mood maybe 4 weeks ago would have been different. The mood currently would be palpably positive.
Yeah, but this whole tariff thing has not really hit the stock market that badly, right? So I think because in the first instance, no major listed companies are impacted. But if I'm wrong and we have 50% tariffs still in a year's time, then clearly there's going to be a macroeconomic negative ramifications from these 50% tariffs. And I certainly would never have expected at the start of this year that India would be facing 50% tariffs.
That's actually, you're right, Chris, that's something that took everyone by surprise, which is why are you also seeing this thaw with a bit of a question mark? Let's see where this pans out. Or to your mind, 50% on tariffs on India is not something that's sustainable or feasible at all?
Well, to me, the base case is that it'll be relaxed by the year end. But if the demands from the US remain that India open up agriculture, then I don't believe there's going to be a deal. And if the demands remain that India stop buying Russian oil, then I don't think there's going to be a deal. But there is a potential for India to reduce buying of Russian oil simply because the price differential with world oil reduces. But that's a different thing from being ordered to stop buying Russian oil by the US.
Yeah, I think you hit the nail on the head. Ordered is the key word in that sentence. If I were to ask you very clearly and simply, what is worrying global investors right now when they look at India? Is it the 50% tariffs or is there something more?
No, it's not. I don't think it's the 50% tariffs. This is a year where clearly the FIIs have record low ownership in India. Our base case is that the Indian market is currently trading sideways because we've got a situation where the market's supported by the incredibly impressive continuing domestic inflows into the mutual fund industry. And those inflows are helping to absorb the other feature of the Indian market right now, which is supply from the corporates as corporates take advantage of the high valuations. So this supply is being absorbed by the mutual fund flows, and essentially India has been trading sideways. And I view this year as a year of healthy consolidation in the Indian stock market. And I'm hoping next year we see a pickup in earnings growth driven by a pickup in nominal GDP growth, which will allow the Indian market to do better. But we still have this question of relatively high valuations in the emerging market context, and we have the ongoing issue of equity supply.
So, Chris, maybe in the last 3 months, culminating into this conference, what is the most asked question to you from investors who read your notes or who've come to the conference to hear you?
Well, are you asking about foreign investors or from a foreign investor standpoint? Yeah, India is not being flavor of the month because one reason India has basically been trading sideways, but clearly India has been a big underperformer in the emerging market context, and that's simply because other markets have done well. So a year ago, China put in a major bottom, and definitely foreign investors. Fourth quarter last year, first quarter, I'm talking calendar year, first quarter this calendar year, foreign investors were selling India to fund increased investments in China. And that has made sense because China put in a major bottom a year ago at about 7-8 times earnings. More recently, the foreigners have been selling India to fund increased positions in Korea. Korea's done very well this year, and foreigners had to play catch up. And they've also been having to put money back into Taiwan. I'm talking about emerging market investors because Taiwan is the same trade as the US stock market running on the AI capex theme. So to me, the chances of returning to foreigners returning to India grow as we get near to the end of this calendar year, because hopefully we will start to see evidence of a pickup in growth caused by the various policy easing seen this year, be it RBI easing or be it the GST cuts. And clearly, one positive spin-off of this US tariff situation is it accelerated the simplification of GST and the cuts in the GST rates. So in that sense, the US tariff thing will prove a medium-term positive.
Chris, for a lot of people, India is missing the AI theme, a couple of other big themes globally, but India has its own positives, right? So when people talk to you about that, oh, India doesn't have AI, so where is it that you can put big money to work? What is your message to them? Because I know you track India very closely for a number of years, right? Over the next 24, 36 months, what is top of mind for you when it comes to India? Investable themes.
No, the key thing for me is, do we get a pickup in nominal growth? I'm talking macro here. Do we get a pickup in nominal GDP growth? Because when companies report earnings and sales, those are in nominal terms. And nominal growth this year in India has slowed below 9% year on year, between 8.5%. And that slowdown has been reflected in the slowdown in earnings growth in the Indian stock market. Whereas if I'd been here a year ago, I was viewing India as historically in a 10-12% nominal GDP growth range. So a very important point going into next year is, does nominal growth pick up more towards 10%? In which case we will definitely get a pickup in earnings growth in the stock market. And that's what I'm expecting given the monetary easing. However, if this time next year nominal growth is still below 9% in India, then that will raise questions. Are we having a structural slowdown? On the AI issue, clearly there's a very important point where the IT services sector is potentially at risk of disruption on AI, just like the software sector is everywhere. That to me is just an issue for everybody involved in software.
Yeah. Chris, you referenced the GST rationalization. What is the kind of impact you see in boosting consumption? And would that tie in your expectations for nominal GDP growth in terms of India? You also recently, for example, added M&M, exited another stock from your portfolio, from the long portfolio. Do you see autos as a primary beneficiary of the GST rationalization?
Well, they should be, and also two-wheelers. So basically, seems to me that this year the Indian domestic fund managers have been, since actually the budget, when you had the income tax cuts, there's definitely been a switch out of what I would call capex plays to more consumption plays, and that trend was already happening, and it's clearly been further encouraged by the GST cuts. And of course, the monetary easing. We have to recognize the monetary policy and the credit policy last year was basically pretty tight. And that's, I think, one reason we had a bigger fall in inflation. So where everybody's anticipating a pickup in consumption, as I say, so have I. If it doesn't happen, it would be a negative surprise.
Consumption is also a fairly wide basket. Would be interested and curious to know where you think that consumption boost is going to come. Is it in the staples? Is it more discretionary? Where do you think Indians are going to spend that extra money?
No, I think it's both, depending. But I think one big issue is you get a bigger pickup in rural areas, right? But I think it's broad-based because the policies are broad-based.
In terms,
and hopefully the GST cuts will not derail the fiscal because there'll be a corresponding pickup in sales activity.
Now, having said that, in terms of what is exciting you from that consumption space, where is your narrow focus right now?
What do you mean sort of narrow focus?
In that very broad basket of the consumption beneficiaries, what are you liking better?
No, well, I have investments in the auto-related sector, but then obviously the consumer finance companies are geared to this whole pickup too, or what you call here the NBFCs.
Chris?
But I think this theme is quite well understood. I also believe the property sector, which many people think the property upcycle is over after a 4-year upturn already. Personally, I think the slight slowdown you've had in the property, I'm talking residential property this year, is a pause to refresh, and I think the property cycle will continue in India. So I also have property exposure in my portfolio.
Yeah. To be fair, you are amongst the earliest proponents of the property upcycle well before it started as well. So kudos on that. Just wondering, Chris, because the conversation is tilted so much towards consumption, capex is being kind of forgotten, and save for this year, India's been a capex-driven story. You reckon at some point of time, capex plays might come back into flavor in India?
I know, I definitely think they'll come back. You're absolutely right. This year, the sentiment, particularly amongst domestic investors, based on my conversation, has been to say, get very excited on consumption and to give up on what the private sector capex. So basically, in the last 10 years, the real pickup in capex came from government-funded capex, and there is a sense that the private sector could have done more on the capex. But if we get evidence of a pickup in demand driven by all these easing measures, then I think it's entirely rational to expect a pickup in capex down the road. So personally, I think it's too bearish to assume that, to give up on private sector capex on a 5-10 year view, which is many people, the sentiment now is very bearish. So if you were a contrarian and you had an outlook extending beyond the next 6 months, you might be thinking about adding to capex plays here.
If you weren't contrarian, and of course, if you were looking at what is moving right now, would platform companies make the cut? A lot of businesses that actually have grown because they've gotten consumers used to using them as a platform. Is that a space that you're finding exciting or overvalued from the Indian perspective?
Now, the platform companies, globally, investors want to own the platform companies. And clearly there's some in India too. And equally clearly, the AI technology allows for more personalized advertising in some of these companies. So this is an ongoing thematic.
Got it.
So the problem in India remains what it's always been on a medium-term basis, and that's what not to own.
Chris, India's in the last 2-3 years maybe become a low beta market, right? It underperforms on the downside. It doesn't quite perform as well as some of the other markets on the upside. Because you cited how in the last 6 to 9 months, India's underperformed massively. If the trade deal is reached, is there a case for a strong rally in Indian markets despite the valuations that we currently trade at?
No, I think there'll be a bit of a pop, not a strong rally, because I don't think the market really sold off dramatically on the news flow.
Okay.
I think these 50% tariffs become negative for the market and the economy the longer they're in place. So if they're in place a year, then that is a problem.
But if they get resolved, then we see a pop. Okay, fair call. The
only good thing about them being in place for some time, it will act as an incentive for exporters to look for other markets.
Yeah.
Which is an important point. Because maybe many people were very comfortable with existing relationships, so this will be a healthy wake-up call to diversify your export base. But at the end of the day, the Indian stock market is first and foremost a domestic demand-driven story, as is the Indian economy.
That's true. For the markets, Chris, though, how big a role would any kind of global central banking decision do? We are on the cusp of the Fed decision. What role could the Fed moves play for Indian markets?
Well, all the Fed easing, what it means for India and other emerging markets, it just gives them more room to ease monetary policy. So in my view, my big picture view is that the US stock market had made an all-time peak as a percentage of world market capitalization at 67% on December the 24th last year. And part of that view is driven by my view that the dollar is in a long-term downtrend, and that if that is indeed true, it's been true so far this year, that's good for all emerging markets.
Chris, we've been talking about tariffs from an Indian perspective, but if I asked you to your view on a broader horizon, and how are you seeing the impact of Trump's tariff policy play out for the American economy? It doesn't seem to have hit too hard so far, but do you think that will continue?
Well, I think the key point is a lot of tariffs have been announced, But in terms of the average effective rate of what people are paying right now, we're still at about 10%. But in terms of what's been reported, we're more like 17, 18%. So my view is very simple. To begin with, companies will try and I think reduce the impact on the end consumer by making savings elsewhere. But the longer the tariffs are in place, my view is very simple. The more that those increased costs will be paid by US consumers. So the more they're in place, the more likely it is to hit the US economy. But for now, there will be measures to reduce the pain for US consumers. So I'll give you a practical example. I was in Japan last week, and the Japanese car makers have cut significantly the price of their cars exported to the US this year. So that will please Donald Trump, because Donald Trump argues that the exporters will eat the tariffs, whereas most economists, by the way, I'm not an economist, would argue that the American consumer will end up paying the bill.
Chris, where are you on that argument, by the way? Do you reckon that inflation is going to make a headway into the US, or is growth going to triumph over inflationary pressures? And what role would that play for future rate decisions by the Fed?
No, my view is very simple. The Fed's cutting rates today, and that's a clear message that the Fed is basically prioritizing a slowing labor market over inflation, because whatever happens in the future, the practical reality today is inflation remains, well above the Fed's 2% target. So the Fed's cutting rates, so the Fed has fudged the 2% target.
Chris, the other question is around the de-dollarization. Heard it for long. It's never happened. But now increasingly a lot of US investors saying that they want to diversify out of US. What is a possible long-term trajectory of this? Does the dollar depreciate over a period of time against all major currencies, including EM currencies? Have you given some thought to that?
No. I think the base case is that's exactly what happens. The dollar depreciates against most currencies. So we've had a significant revaluation of the euro year to date, despite the fact that the ECB was cutting rates more than the Fed. And the Asian currencies, in my view, have begun long-term appreciation trends. I'm saying the Singapore dollar, which is the equivalent of the Swiss franc in Asia, can get a parity against the US dollar. It's not unrealistic to view the renminbi as going to 5 against the dollar on a medium-term 5-year and more basis. As for the Indian rupee, mentally, I think I'm viewing 89 as the bottom. And I think Asian currencies have begun a long-term appreciation trend against the dollar. To hedge the dollar weakness in my global equity portfolio, I have 10% weighting in gold mining stocks, which are right now rallying dramatically. And I have a long-standing position, currently 6% in the Bitcoin ETF. So I've got 16% of my global equity portfolio hedging dollar weakness.
Wow, that's large.
So, just to bring it back to India, with that very interesting American view. For India right now, we talked about the GST rationalization in the context of tariffs and a buffer to them perhaps. But what more do you think needs to be seen for that comfort of a move towards a nominal GDP growth of 10%? What would you have in the list, in the wish list, if at all?
No, I think the Indian government's basically done what it can do on this one. So to me, it's just a question if the animal spirits pick up a bit. I think the policy measures are in place. The RBI has already eased a lot. I don't think the RBI needs to slash interest rates dramatically more because they've already eased policy a lot, and you don't want to undermine the currency. So I think basically the policies are in place.
You know, Chris, we're also speaking on the occasion of Prime Minister Modi's 75th birthday. And some of the programming that we're doing today is to look at his government's policies and the impact they've had. You've been vocal about what this government has been doing and the impact of its policies. Anything you'd want to add there?
Well, no, I mean, just there's obviously been dramatic progress in India under this government. That's just obvious. So if I had to cite one obvious area, is the huge pickup in government capex, which has created huge improvements in infrastructure and therefore, created a much better framework for the private sector to operate in.
In terms,
I think another area I'd mention is the bankruptcy reform process, which appears, obviously there takes time, but that is a major change in India. Another major dramatic change has been the Real Estate Regulation Act, which I think creates a much more sustainable property cycle than we saw in the past. So those are three specific areas I'd mention. There are many more though. And obviously GST is another example.
Yeah, in fact, Chris, for a lot of people, GST 2.0 was arguably one of the biggest reforms. So one big bang reform done, RBI cutting rates as well. What else would you want, let's say over the next 12 months from the Indian policymakers?
Yeah, but when you talk to the policymakers in this third term of the Modi government, there's been a lot of talk about addressing what I've heard referred to as regulatory cholesterol, thereby improving the ease of doing business in India. So it's easy to talk like this, but clearly I think the government's extremely focused on this. And that I think is a very healthy focus. And that's something that's can't be done just by pressing a button. But everything I'm hearing makes me think this government's very much focused on this whole issue of ease of doing business, which can only really be implemented at the bottom-up level.
Chris, a lot of our viewers are average retail investors who are now tracking equity markets. They look to our coverage of your notes. They will be looking very closely to all your message on the Indian markets. What would you like to communicate to them? Investors who've seen a big bump up in the last, I think, 2 or 3 years, and then a tepid kind of move on their portfolios in the last year or so. What would you tell them today?
No, I think they should continue to do the average investing, which is how they're operating. Many of the people are investing in this country on the SIP program. That seems to me a very rational way for investing in the stock market.
And in terms of what you see as the future of the Indian stock market, where do you see the Nifty perhaps closing 2025 at?
No, I haven't got a benchmark, but I would also add one other thing. I mean, they should obviously own equities, but I also think Indian government bonds at the current level are attractive too.
Okay.
Because I think the fiscal situation in India is in my view being well managed, and in my view the yields are reasonably attractive, and I would certainly much rather own Indian government bonds than US Treasury bonds.
Wow, that's quite a line to wrap up. Thank you so much, Chris Wood, for speaking with us.
Yep. Well, and have a great remainder of the conference, Chris. Really appreciate your time.
Thank you.
All right. And well, with that, viewers, it's a wrap on this very special conference from a very constructive Christopher Wood, Global Head of Equity Strategy at Jefferies. Thanks so much for tuning in.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें। गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Hello and welcome. You're watching Know Your Company on NDTV Profit with me, Somit Sarkar. Today, the company on KYC that we are going to discuss is Prudent Corp. And in the next half an hour, I'll try to give you the most important information about this company. But firstly, let's try and understand what are we trying to understand on Prudent Corp today in the show. Firstly, if you look at the company had done a recent acquisition of the mutual fund distribution business of the Indus Capital. So what is the rationale behind this acquisition that the company has done? Is the deal EPS accretive? And what are the synergies? We'll try to get an answer for all that questions. Also,
the company had recently achieved all the earlier given targets. So what is the next growth target that the company has internally set for itself is something that we would want to know from the management. Apart from that, what are the key levers that could lead to operating margin improvement going forward for Prudent Corp, and what is the anticipated growth when it comes to the insurance segment, which is the newly started segment of the company. So what is the kind of growth that they are anticipating from this segment going forward is also something that we would want to know, and how Prudent as a company is trying to mitigate the key risks that are present in the company. Firstly, when it comes to reduction of commissions, and the second key risk that comes on board for Prudent Corp at this moment is the fact that there's a big competition that is coming in from fintech. So how is the company mitigating this key risk is also something that we would want to know from Prudent Corp. But firstly, let's understand what does this company do. Now, this company was incorporated back in 2003. It provides wealth management services to retail investors. Now, Prudent is amongst the top few non-bank mutual fund distributors in terms of average AUM and commission that they have received. Now, as of June 2025, if you look at the company's average mutual fund AUM was close to 1.2 lakh crore rupees, with 96.7% of this coming from the equity-oriented schemes. Now, over the years, if you look at, along with growing its mutual fund distribution platform, Prudent has also forayed into the life and general insurance solutions, stockbroking services, SIP with insurance, gold accumulation plans, asset allocation, and trading platforms. So the company has tried to diversify its revenue sources as well. However, in the mutual fund business, if you look at, it has an open-ended source distribution of mutual fund products, where it distributes mutual funds of asset management companies irrespective of their affiliations or size, thus providing their clients a large spectrum to choose. Apart from that, in the insurance segment, it includes distribution of life insurance, which has term, par, non-par, annuity plans as well. And when it comes to general insurance business, it includes primarily health insurance business that the company sells. When it comes to stockbroking services, it provides these services to retail customers to trade in equities, derivatives, and currencies. And when it comes to other financial products, it also provides PMS, AIF, P2P products, bonds, fixed deposits, small case, unlisted securities, and multi-other loan against securities as well, and sovereign gold bonds as well. So a very big portfolio that the company has. Now, if you look at the revenue model of the company, it's quite simple. It's commission based. The company earns recurring revenue from commissions that it earns on selling various products, and non-recurring from brokerages as well. Now, as I was talking about the revenue mix, it has tried to diversify it, but 83% of the company's revenue still comes from mutual fund products. Insurance product, which is a newly started business in FY25, contributed around 12% to the top line. Stockbroking, again a very small contribution coming in, just at 3% odd, and then the various other segments that we discussed, those segments contribute close to 2% odd to the company's top line. So that's all that we have about the company. Now, if you look at the key parameters on which we are going to rate Prudent Corp today, firstly, it's the income statement. The second one is the balance sheet that we are going to see for Prudent Corp. Now, how good the balance sheet is something that we are going to discuss here on the show. And then apart from that, we are going to also look at cash flows, return ratios, shareholding, how the share price performance has been so far from listing, and valuations, how to stand up at this current share prices, and what is the 12-month forward valuations as well. And lastly, we're also going to see how analysts are currently valuing Prudent Corp at the current juncture. So firstly, to start off with the income statement. If you look at the income statement, the company's revenue over the period, that is over FY22 to FY25, has grown at a compounded annual growth rate of 35%. EBITDA, similar growth of around 32% odd. Net profit, again a 35% growth rate, a quite stable growth that we have seen coming in from the company's financials. Now, if you look at the Q1 financial performance of Prudent Corp, the revenues on a sequential basis were higher 4%, but on a YOY basis, it was up 18%. EBITDA increased by 14%, while the net profit jump was around 17% on a YOY basis. So a steady growth that we have been seeing that has come in from Prudent Corp so far. a 30% plus CAGR growth over the last 3 financial year, which is quite strong, and hence we are giving it a thumbs up at this moment. Even if you look at the margin trajectory over FY25 compared to FY24, if you look at the margins, it has increased to around 24.7%, but FY24 numbers had some kind of one-off, and that's the reason we had seen this kind of a depressed margin. But overall, the margins have remained quite stable at around the 25-24% band for Prudent Corp. Now, if you look at the balance sheet of Prudent Corp at this moment, it is a net cash balance sheet, which in itself is a plus point coming in for the company. The book value stands at around 6,680 crore rupees, and if you look at the mutual fund AUM, it has continuously grown over FY23 to FY25. The mutual fund AUM has grown from 56,189 to 1,03,515 crore rupees, which is a quite strong growth that we have seen. And as again I mentioned earlier, it is a net cash balance sheet that Prudent Corp currently has. In fact, they have as of Q1 they had cash of more than 500 crore rupees. So that's also a thumbs up coming in for Prudent Corp on the cash on the balance sheet side. Now, if you look at the cash flow from operations over FY23 to FY25 has increased from 127 crore to 161 crore. EBITDA has seen a jump of 173 to 262, which means that the cash flow from operations to EBITDA continues to remain above the 60% mark, which is very crucial for any company. And this clearly means that whatever income that the company is generating is largely cash. Nearly 60% of the EBITDA that the company generates is cash and is coming into the company's balance sheet. Again, cash flow is a thumbs up at this moment. For return ratios, the return on equity has been continuously increasing. In FY21, the company's return on equity stood at close to 28.7%, which has now increased to 34%. So a steady rise in the company's equity, given the fact that the company's earnings have been increasing. So again, a thumbs up coming in on that front. Now, if you look at the shareholding pattern here, the company's promoter holding from March 2023, yes, the promoter holding has come down from 58.4% to 55.3%, but there is not much of a dilution that we are seeing. Also, given the fact that FIs and DIs have taken a strong interest in the company. In fact, FI holding has increased from 1.2% to 17.5%, while the DI holding has increased from 9.8% to 20.8%. Domestic institution investor interest has nearly doubled when it comes to Prudent Corp, while if you look at the investor interest of foreign investors, it has quadrupled over the last 3 years. So strong FI and DI interest that we are seeing when it comes to Prudent Corp, and hence a thumbs up coming in for Prudent Corp as well on this front as well. Now, if you look at the share price performance, in the last 1 month, the share prices are up 5%, 6 month 48% return, YTD returns of around 10 odd %, and since listing, the share prices have increased nearly 430%. Again, a thumbs up on that front. However, if you look at the valuations, the 12-month forward valuation for Prudent Corp stands at around 47.7 times. This is a bit expensive when you compare with his other peers like Nuvama Wealth and 361, which are trading anywhere between 20 to 30 times. So largely on the valuation front, it's a thumbs down, given the fact that valuations are quite expensive at around 48 times. That is the 12-month forward valuation we are talking about. And lastly, when you look at the analyst recommendation, there are 3 buy ratings on the counter, 3 hold ratings, and the return potential over the next 12 months is largely flat, which means that the valuations are at full as per analysts. So hence we are giving it a neutral rating at this moment, given the fact that as per the consensus target price that has been set by around 6 analysts, the upside potential is quite limited when it comes to Prudent Corp. So to sum it up, if you look at income statement is a thumbs up, balance sheet is a thumbs up, cash flow is a thumbs up, that's 3 points, return ratio thumbs up 4 points, shareholding thumbs up 5 points, street cred again a thumbs up 6 points, valuations are thumbs down, and analyst recommendation is neutral, which means that the total rating for Prudent Corp comes at around 6.5 out of 8. Now let's go across to the management, the chairman and managing director of Prudent Corp, Mr. Sanjay Shah. Well, sir, thank you for giving us time. Firstly, to start off with, can you explain to us what is the rationale behind this recent acquisition that the company has done?
So, I think the acquisition of Indus Capital has been a very perfect fit for what we were looking for. So if I'll tell you, Indus is a company which has been there in the mutual fund distribution business for almost about more than 22 years, and they have roughly about 2,050 crore of mutual fund distribution AUM, which has been serviced to 3,500 families. So the average AUM per family would be roughly about 60 crore, 60 lakhs. So I think it's a very good fit for us because Prudent is also a pure mutual fund distribution play, and ours is 95% equity in 120,000 crore of AUM. In that case, also it's a 95% of equity AUM. So it was a good fit for us. As you are aware that Prudent is a very strong player in B2B space. However, Prudent started as a B2C. So today, if I am telling you I have 120,000 crore of AUM, roughly 10,000 crore of AUM we have from B2C, and we got something which is very quality in the B2C space. So we align the interest with the management of Indus.
Well, if you look at Indus Capital's AUM, it is grown at, it's around 2% of your quarterly average AUM. But the profit before tax margin, that stands at around 70% as against 24% of Prudent Corp. So incrementally, what will this do to, what will this acquisition do to your business? What about your margins and profitability going forward? And with this acquisition, will you also have access to newer geographies, customers?
You are very true. So if you look at the currently Prudent is into a B2B business, and B2B is a business wherein you deal with all the independent, highly motivated, qualified mutual fund distributors, and there it's a pure variable business, and whatever you earn, almost 67 to 70% kind of revenue you share with them, and your margin is roughly about 30%. While this is a B2C business wherein you will have the real estate managers who will be managing the customer's portfolio, and because they are your employees, you will be having the fixed plus variable remuneration payable to them, and then the payout normally is reasonably lower. Definitely Indus has a very good payout for their existing real estate manager. So there you have a very high margin. So you are very right. If you have a top line of 100 rupees in B2C, your margin would be about 70%. If you are into B2B, if you earn 100 rupees, your margin will be 30%. So I think it's a complementary business to each other. Coming to the my capability to work on their customer base, so Indus is a pure mutual fund distribution play, and they have established themselves as a strong player on the mutual fund distribution side. While Prudent is also dealing in the many other retail product like insurance, PMS, AIF, NPS, fixed deposits, even broking also. So we believe that we will be able to provide the additional services to Indus customers. So cross selling is going to be a very strong opportunity for us.
Right, sir. So with this acquisition, what is the kind of debt, employees, etc. that you will be taking as a part of this deal? And how long do you think the integration process between both these companies could take?
So we are acquiring it as a going concern. So whatever is the existing setup which they have in Pune, so they have the office, manpower, rented premises. So everything as it is, including entire manpower, will be on the books of Prudent. So I think we are acquiring as a going concern. From the point of view of their client, from the point of view of their real estate managers, there is no change as far as processes, approaches, and the activities are concerned. As if nothing has happened. Only thing is that the name will change from Indus to probably Prudent and Indus together. As far as the process is concerned, typically we have signed the term sheet with them, and the MFI process is roughly about 15 to 20 days, wherein the letter has to go to all the customers saying that this process is happening and their negative consent is required by them. If they do not agree, then they have to say that no, I'm not agreeing with this merger. So my belief is that by end of this month, entire Indus AUM should be Prudent by 30th September.
Right, sir. Now, if you look at this acquisition, this is entirely funded by cash, given the fact that you have a cash balance of more than 500 crore, right?
Yeah, absolutely, because Prudent is sitting on roughly about 600 crore of cash, and current payout which we'll have is roughly about 85 crore, and this entire 600 crore is sitting on a liquid book. So yeah, we do not require any kind of money to be borrowed. Another thing is, when we are acquiring Indus also as a going concern, they do not have any kind of liability or debt or so it's a very clean business which we are acquiring without any liability or contingent liability.
Given that you will be left with a strong cash on the books, even post this acquisition, any more acquisitions that you're looking at?
Yeah. So I think with this acquisition, actually, we wanted to give a very strong message to entire India's mutual fund distribution community that if you have built a very strong long-term assets, which is managed by a very strong team, and you have somebody who is managing entire show from the front, then we are definitely ready to align the interest with them, because Prudent will be ready to absorb them. And I can tell you, in case of Indus, because they have almost 15 to 17 very loyal relationship managers team, which is headed by a very strong industry veteran called Mr. Gaurav, who is handling this business. So it was a very good business where we can acquire and the business can also continue as it is. So if that kind of thing is available, we are sitting on cash and we are regularly exploring these opportunities. So we are definitely open.
Right. Now this acquisition, if you look at, it's coming at around 10 times price to earnings, while Prudent trades at more than 47 times valuation. So this acquisition is happening at a much lower valuations. Why? And is this deal EPS accretive also?
If you look at us, independent mutual fund distributors who doesn't have the business continuity in place, and it is not supported by a big institution, I think what we offered as a PE multiple is a very reasonable PE multiple. It's not very high, it's not very low, and at the same price, deals are already happening in the market. May not be very large, because ours is the largest all cash deal. Plus, Prudent is offering everything in form of cash. You might have seen some of the deals where it will be an equity swap of one company to another company. Well, it's a pure cash. So my belief is that it's a very reasonably priced deal for us, also for them also.
Right, sir. Now, if you look at earlier, you had aspired to achieve an SIP book of around 1,000 odd crore rupees. Now, you have already crossed that threshold. So, what's the next target internally that Prudent Corp has set for itself?
Yeah, so fortunately, we already crossed the 1,000 crore of SIP book in the month of June. And when I'm talking to you currently, we are at 1,062 crore. So that's a landmark achievement for us. And we celebrated very, very strongly this number, because this 1,062 crore of SIP book we have 35 lakh live SIPs. And I can tell you about the Prudent's market share in the SIP book. We are 3.7% in the total SIP book. And if you take out the direct piece, then Prudent is roughly about 6% in the SIP. So it's a very strong contribution to the industry, and we are very happy that we are participating into the India's retail financialization story.
Right, sir. And any internal targets that you have set for your on the market share front? Where do you see a market share to be, say, 3 years down the line?
Market share at in the regular piece about 5.6%, and gradually we want to take it towards 6%. However, internally we believe that today we have 1,060 crore. By March we should reach to a 1,200 crore of SIP, and in next 3 to 4 years time, rather 3 years from this year end, we should reach to a 2,500 crore. So that's the internally we feel that 2,500 crore is something which is achievable in 3 years post March.
Right, sir. When you look at the operating margins, it was a bit under pressure in the first quarter. But what is the outlook here, and do you see any levers for operating margins going forward?
So I think the operating margin, if you look at Prudent, as I think I explained you, that Prudent is purely into a B2B space, and Prudent started the business in the B2C. So what has happened is that last 1 year, 1.5 years, our share of B2B, which is the partner-driven business, has gone up by almost about 200 basis points to 250 basis points. And as I told you, if 100 basis point incremental share comes from the B2B, my payout ratio to them would increase by 67 basis points. So there will be so that is a reason I think probably you will have seen that some amount of pressure came on operating margin side. Second, because of the competition, if you look at in the B2B space, there used to be only 2 players. However, in last couple of years, we have seen a lot of players entered into this segment. So we had some amount of cost pressure till last year, and that's the reason my employee cost has also gone up in the range of 18 to 20% in last 2 years. But probably my belief is that from the beginning of this year, we have been seeing that pressure is receding. And another important thing I can just wanted to communicate that we just got the approval for ESOP plan from exchanges, and in the next quarter, we will roll out the ESOP also, which is not a part of cost now. So probably next year, you might have one additional cost element of ESOP. But then after, we are very fairly under the assumption that operating margins should stabilize, rather start improving from here on.
Right. And I clearly understand that insurance business is a newly started segment and it contributes around 10% to the top line. But the growth has been quite high on this counter. So how sustainable is this and what is the kind of incremental contribution that you're expecting from insurance segment to come in going forward?
So I think we believe insurance is also like mutual fund where the penetration is very, very low. If you specifically look at the health insurance, we believe there is huge scope for expansion or the growth in this industry. If you look at Prudent, we are basically a mutual fund distribution house, and what we are doing is that we have 34,000 mutual fund distributors who work with us, and we try to convert them as a point of sales to distribute and advise the insurance product also. Out of 34,000, we could be able to convert almost about 12 to 13,000 people as a point of sales. But we believe that insurance is a huge growth ahead for us. And we are purely focusing, as far as your general is concerned, into our retail health. I'll just give you the numbers. March 23, my retail health book was about 100 crore. Currently, we are at 160 crore. And in next 1.5 years, we are targeting that 160 crore should go to us.
Right. The biggest risk that analysts usually point out is the AMCs, given the fact that AMCs could cut commissions going forward. Any risk on that front that you could see going forward that could happen, which will keep your yields under pressure?
So if you look at, I think the entire industry has moved to a new TR structure in 2019. And then after, because of a huge mark-to-market and the huge growth in the AUM, from last year, we have started seeing the repricing of current AUM by the couple of AMCs. If I give you the number perspective, let's take an example that in the first quarter, Prudent's AUM revenue was 300 crore. And if I can tell you that the projected impact of all the changes which are started by HDFC, then for example, Kotak, SBI or the Motilal, everybody, a lot of people has done the repricing of assets in their either all schemes or a couple of equity schemes. The cumulative impact is not going to be more than 15-17 crores. So it's hardly about 1.5 basis point. That is what the impact is. However, we understand that as you see a more and more growth in the AUM at particular scheme level, some amount of pressure.
Right, sir. And when it comes to fintech, that is the another key risk that is there for the company. So how is Prudent Corp trying to mitigate the same?
I think my belief is that fintech is probably helping to expand the market. Is probably why fintech has grown. I believe only significant reason the growth of fintech was the mutual fund distribution community is very, very less. Today, our country has 175,000 people who are working as a mutual fund distribution. So fleet on street is very, very less, and there was a huge gap, huge vacuum for people to invest. And I think that gap has been capitalized by the fintech player. However, the business model of fintech and the mutual fund distributors both are different. For fintech, they acquire the customer of a mutual fund through their acquisition route, and then they start offering them either the broking product or the NBFC, while the mutual fund distributors' core revenue comes from the well-being and the wealth of their clients. So my belief is that fintech is growing, but not growing at the cost of MFD. Right. And when the customer on the platform will grow to a size, he will definitely need an advisor some point of time.
Right.
So normally we tell our business associates and the partners that when it comes to a fintech, please make sure that our tech offering,
Right, sir. Right. Well, thank you, sir. Thank you for joining us and explaining your company in detail. Well, that was the management of Prudent Corp. Well, with that, it's a wrap on this edition of KYC. Stay tuned and keep watching NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप। The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Good afternoon, you're tuned into NDTV Profit, and this is special coverage on account of PM Modi's 75th birthday. Tell you what, let's take a look at some very interesting conversations that we had on this occasion. But tell you what, before we do that, let's quickly take a look at what the markets are up to at this point in time. When you take a look at the Nifty, 25,300 is the kind of level that you're seeing coming in for the Nifty. So that's a decent day of trade coming in. Let's also take a look at some of the top gainers from within the sectors, and it's defense largely that is leading this particular rally at this point in time. 1.9% uptick coming in on defense as well. So that's largely the sectoral picture that we have at this point in time. But as we look back at Prime Minister Modi's reign on the occasion of a milestone birthday, let's also go across and listen into a slice of the conversation that NDTV Profit's managing editor Tamanna Inamdar then had with Sanjeev Sanyal, who's a member of EACPM. Let's go across.
We've gone through all of the minutiae and the details of the reforms. Clearly, there has been a big economic boost. Capital markets have also reflected it. But what is the thought process? Is this a vision which is very, very clear from day one?
So I think you have to see what Prime Minister Modi has been doing over the last 11 years in the historical context of how economic policies have been made in India for the last 70, 80 years since independence. So, first of all, I mean, we spent the first 45 odd years till 1991 as effectively a socialist planned economy. Now that system completely broke down in 1991, as you all know. And so then we shifted to a market-based system. However, it didn't happen in one shot. So what you saw is a clump of reforms from 91 to 93 under the then Prime Minister Narasimha Rao and his Finance Minister Manmohan Singh. But then after the initial period of crisis, the reform momentum basically disappeared because the economy recovered, it was growing decently well, and there wasn't so much political consensus to keep doing more reforms. So it was really a response to a crisis. Now then, the economy again slowed down, you had the Asian crisis as well, and then you had another round of reforms during Prime Minister Vajpayee's era. So the Vajpayee era reforms, again market-oriented, you saw some push towards privatization for the first time, and then you saw the first round of attempts to build big infrastructure, and that gave another round of growth momentum into the early 2000s. But again, that too petered out after the space created by that round of reforms got done. Unfortunately, that reform momentum was not carried forward. And then, of course, you had the great financial crisis of 2007-8. So the economy again slowed down. This time, the response was not to do more reforms, but instead to pump up the economy using the banking system and the fiscal. So you saw a huge amount of loan being given out indiscriminately in the years 2009, 10, 11, 12. And you did get somewhat of a revival in growth, no doubt. But what happened as a result of that, since it was not backed by economic reforms, you effectively led to a huge amount of macroeconomic instability. You will remember by 2013, we were being called the Fragile Five. Our banking system was in deep trouble, inflation spiked up, and so on. So then, this is the context in which in 2014, Prime Minister Modi came to power. The reforms had been stalled by this point for almost a decade. The economy had done well for a period of time in the 2000s, but then had slowed down and then had been artificially pumped up with lending, which had led to this macroeconomic instability problem. So his first problem that he had to face was to anchor the macroeconomy to something. And that is the context in which you got the inflation targeting framework being put in place. You also saw the big effort to create a framework for creative destruction through the Insolvency and Bankruptcy Code, and then that was used to clean up the banks. So that is really what was going on, anchoring India's macroeconomy. So that was the first big thing he attempted to do. The second big thing he then tried to do was to put in place the structural reforms. These are the things like GST and so on. So that is what was being done in the immediate pre-COVID period. And then what happens is that you have, of course, the disruption of the COVID period. And then that period again saw, despite all the problems you saw the Indian approach to managing COVID was much more restrained. Why? Because we had this macroeconomic instability problem. And so we went through the COVID thing. Yes, we provided support to the economy, but it was done by pumping up, for example, infrastructure spending rather than giving out stimulus checks indiscriminately
So, Mr. Sanyal,
that is why we were very controlled about it.
Of course. Would it be fair to say that currently the need of the hour and the focus is about, protecting India from global turmoil? This is where we are bang at the center of it. And while what India has done in terms of stabilizing her economy, etc., has been well discovered, well reported on, but protecting us in the middle of what is happening from the US, wars breaking out, etc., has become the key challenge right now?
I would say not, because the investment we put in the last decade into basically building the resilience of the economy in terms of cleaning up the banks, accumulating a huge amount of foreign exchange reserves now at some 700 billion worth, inflation well under control, and so on. That means that actually we have a fair amount of buffer towards all the shocks we are getting, including the US tariff issue. So while we are seeing a lot of turmoil abroad, if you see our current account, for example, it's very well behaved. Our external debt situation is in decent shape. We recently got a sovereign upgrade. So this is something that we are reaping the benefits of what we did over the last 10 years. So what we are doing now is somewhat different, because we are now looking forward to the next 10 years. And that is something different. So what are we doing? We are investing heavily into infrastructure, which is what we really pumped up during the COVID recovery period, but we continue to do that. We are investing into certain areas like, for example, chips and other areas where we think we can scale up. We are investing into cleaning up many of the things, like GST system is being cleaned up, but we are doing a large number of process reforms to basically make our government much more efficient, ease of doing business, ease of living. So this is the kinds of things we are now doing, because we are really now thinking of going one step, from the stability sort of stage, which we have achieved, to now beginning to grow much faster. What we want to now do in the next stage is to grow on a sustained basis at 7-8%. At some point, the global situation will be stable enough to be able to grow at, say, 8% on a sustained basis.
Sure.
We can't do it right now because of the external situation, but we can't turn up in that environment, the good environment, and then say, oh, we need to build a stronger economy. So what we are doing now is beginning to invest into the productive capability of the economy to be able to compete abroad. And so that is really the focus right now.
So, Radhan, there you go. That was a slice of a very interesting conversation. Some good commentary coming out of that conversation. In fact, investments made in the last 10 years are going to be driving growth going forward. And Puneet, these have been some key investments. Couple of investments that he's highlighted, of course, have been on the lines of infra, boost of easing business. That's a lot that we're looking at.
Well, definitely. And I think one of the major pushes has also come on the financialization, essentially, of the economy that we've seen. The increase of demat accounts, what's it done for the capital market as a whole as well. So let's take that conversation forward as well. Dheeraj Relly, the MD and CEO of HDFC Securities, is now joining in. Dheeraj, very good afternoon to you. Thanks so much for joining in, and always a pleasure speaking to you at NDTV Profit. Let me first start off with a broader question on your views with reference to what we've seen in the reforms taken under the Modi era. GST 1.0 and 2.0, demonetization, IBC, Jan Dhan, Make in India, PLI, I can go on as well. What do you think that has had an impact on India Inc. of all these measures?
So last 10 and 11 years under Modi's leadership have been phenomenal for India as a country. We have moved from 2.04 trillion economy, which was standing at 10th rank in the world, to now 4.20 trillion economy, which is just fourth largest economy. And we are promising to be the third largest economy sooner than later. We have seen a slew of reforms and targeted initiatives from the government in last 10-11 years. And also some of the reforms were disruptive and some of them were targeted. Disruptive reforms like GST, you just mentioned, and also demonetization. These two reforms paved formalization and digitization for the country at large. And also, there were transformational reforms that were done in the form of Make in India, also in the form of Jan Dhan, Aadhaar, mobility, that created an infrastructure for the financialization of savings. I talk about my industry, financial services. We have moved significantly from cumbersome onboarding to a absolute 100% digital onboarding of customers, and that has led to a democratization of investing in India. And also we could able to reach the India as a country and every nook and cranny of India, and able to serve the underserved and underprivileged customers as well. So Jan Dhan proved to be a very big success for the government. Also on the manufacturing side, Make in India has really played a role. And in 1920 or so, we have seen many measures taken around the PLI initiatives and are continuing. And that has led to a significant momentum in the manufacturing in India. I think initiatives like liberalization of foreign direct investments, also privatization and strategic privatization, and also consolidation of public sector banks have really augured very well and created a robust infrastructure for growth. And last but not the least, I can go on and talk about more initiatives, but working on the infrastructure and ensuring that we have, through Gati Shakti scheme, working on the infrastructure and connecting the entire India through rail, road network, and also adding many more ports and airports have really made India as a robust economy.
Dheeraj, you highlighted a lot of reforms that have happened over the last 11 years. How has India benefited from these government policies? Which sectors are the major beneficiaries according to you?
To specifically on banking and financial services space, I think I would attribute the success and democratization of banking and financial services to the Jan Dhan, Aadhaar and mobility. We have leveraged Jan Dhan, Aadhaar and mobility to its potential to reach out the every small and underserviced customer in India, and able to now serve them through banking and financial products. We have seen financialization of savings playing out significantly in last 10 years. Just to substantiate my point, 10 years ago in 2014, we were at 1200 odd crore SIP flows, and now it is to over 28,000 crores. Demat account used to be over 3 crore and now it's over 20 crore. These two number talks volume about the penetration and democratization of financial services. The good part is that in last 10-11 years, retail investors have made money in the capital market space and able to avail the banking services, loans, investments, savings, and that too without going to the branches and leveraging the digital infrastructure created through UPI and as well as through other methods. So I think our industry have been immensely benefited with the initiatives taken by the government in last 10-11 years.
Dheeraj, we have seen multiple measures, and we've discussed that in the first two questions, the GST 2.0, income tax benefits, as well as the RBI rate cuts that have happened this year as well. Do you think that these are yet to show effect on the economy as well as markets as a whole?
I think to be specific to this particular financial year, from last 3 or 4 quarters, we have seen slowdown in the capital market space and also on the consumption side. And government has made a necessary intervention now through GST and also leaving more money in the hands of investors through direct access. So we are confident that this would work well for improving the consumption both in urban as well as in rural areas. With good monsoon also, it will. We have seen some green shoots in the consumption coming from the rural areas.
Looking at the next 5 years, Dheeraj, what are the specific reforms that you would like to see accelerate essentially the growth of India, at least in this particular time frame?
See, I think the unfinished agenda for Mr. Modi is to work on land and labor reforms. Also, if we can take more initiative to promote inbound tourism, that will create more employment in India and it would have a more granular growth in India. So these are the three areas I want government to focus on. I know it's very difficult to focus on some of these areas and it may require large funds also. There I have a suggestion that government can monetize a lot of its assets and equity that they have and channelize these resources to promote inbound tourism and also do more reforms on the infrastructure side so that we can grow leaps and bounds.
My final question, Dheeraj, now, we've spoken about, the reforms that have happened over the last 11 years under Prime Minister Narendra Modi. Your wishes for Shri Narendra Modi as well at this particular point of time.
Mr. Narendra Modi has done, amazing job for India to put India on the global map. And now we are fourth largest economy and as well as, well respected. So we could able to get a differentiated positioning in the world under his leadership. I wish him absolutely pink of health and I want him to continue and charm us with his energy and his charisma. Thank you.
That's Dheeraj Reddy. Thanks so much for joining and giving us perspective on the reforms that we've done on Prime Minister Narendra Modi, as well as what could be his view, some of those to look at in the next 5 years as well. But that's largely, a sentiment that's been echoed. The multiple reforms that have done, also a lot more to follow going forward as well.
Well, absolutely, and completely agree on both of those counts because, we did have guests also talking about both of these things. That is something that we've got in terms of what we've managed to highlight. But let's keep it going with a deep dive into what PM Modi's reign then looked like for the economy as well as for the markets as well. In fact, we're joined by Amisha Vora, who's the chairperson and MD Prabhudas Leeladhar. Thank you so much for taking time out and joining us this afternoon. First things first, I wanted to get a sense of what you feel about the policies under the Modi government in the last 10 years. What do you think has helped the Indian stock market?
I think first and foremost, I must say that thank you to give me this opportunity to wish our beloved Prime Minister and speak about his performance during his tenure on his milestone 75th birthday. I wish him many, many more years of equally strong leadership in India, in Asia, and globally. Coming to his era when he started, the time before in the markets, financial markets was called as policy paralysis. Our banks were in dire state with bulging non-performing assets. And we were looking for unblocking of the economy. I think our expectations was just around that. But what is actually delivered in this last 10 years is strong, tough decisions, detailed, minute work, and unparalleled execution. Just to give you a few examples, not only that our banking crisis was handled with a very strong principles of clearing and bringing to justice everything and everyone which was not happening right, and taking pain during that time when the economy gets little starved of the capital, but also after that, as you see, the slew of reforms or actions, be it in terms of defense, the sector was so dependent globally, very diligently, each and every key policies within defense were looked at in terms of pass-through, in terms of vendor accreditations, in terms of payment systems, and the defense has become one of the key turnaround industries for India, as what we can very clearly see from what has happened to defense stocks, their order books. Also, similarly, the touch of this policy reforms was on railway sector. I remember in the markets, for over a decade before this, every time we used to go to those players in the railways and all, and they would say they're expecting some orders, but no orders were materializing. You see, in last 10 years, railway has been completely revamped with the kind of changes for consumers, to nation, to, of course, industry. And these two have become major contributor. Beyond that, for being up in the curve, the way PLI is introduced is also unparalleled, giving rise to so many industries within India. And from the financial perspective, if you see the way COVID crisis India handled was outstanding. We never overspurred, we never deprived. At the same time, we kept as much possible our fiscal discipline, fiscal, you can say, path as strong as we can without much impacting banks and also taking care of borrowers. So the revival of India was much faster. So from all major economic policies and parameters, if you ask me, the team under Mr. Modi has delivered fantastic policy regime.
Well, absolutely, point taken there. But tell you what, according to you, which are the three sectors that you think have benefited the most as a result of these policies? Then take us through that entire list then.
I would also like to mention here that the game changer for industry and India is GST. We started with first round of GST, a little hiccup in implementation, a little hiccup on industry through the stocks and what to do, etc. But as you see, over the past few years, the GST revenues have started really galloping so well, bringing so many states of India on one table and making it work itself is a mind-boggling achievement. But now we are at the cusp of GST reforms. As you see, to revitalize Indian economy and give power to Indian consumers and Indian demand and in turn Indian businesses, we have reduced our GST rates substantially. And I'm extremely confident that, we call it in the markets that Trump tariffs are transitory, but GST reforms are permanent. And this is how this will lead to the next round of growth in India. And we will not be surprised that in 2 years, we can start touching GDP growth, which we have not witnessed till now in our history. Some of the sectors which I think from old economy or the existing listed plays and non-listed plays, which will continue to do, which will do very well and will see exponential growth, will be around to start with, I guess, EV segment. So whether it is EV buses, EV trucks or EV cars, this segment, and below that, the ancillary or the BESS, the battery storage systems or charging system, all this will continue to do very well. Similarly, solar has been doing very well, but I think that the growth has still many, many more legs, and data center is also one segment which is doing very well. From investments perspective, if you see, I think that the consumption demand will go up a lot, which will also mean that our steel and cement sectors will also do very well. And beyond that, as our per capita income keeps rising, the healthcare industry, be it hospitals or diagnostics or hotels, airline, some of these sectors will also continue to do very well.
Well, absolutely. Thank you so much for helping us out with that entire list of what really worked for the Modi government as well. But that's all the time that we have on the show. Thank you so much for tuning in. Don't go anywhere because a very special conversation with the star team of Urban Company lined up on the other side of the very short break.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. The best app to use is the NDTV app.
Welcome to this very special conversation. I think undoubtedly stock of the day, company of the day and the management of the day that everyone wants to hear is Urban Company. What a rock star debut this listing has had. nearly 60% up. Yeah, there you go, but 63% up on the stock price right now from the listing debut. Now, of course, a lot of questions that investors would have, those who have FOMO if they didn't get the allotment, and what the path ahead is. We have exclusively in our studios Team Urban Company. Abhiraj Bell is with us, CMD and CEO. Varun Khaitan, the ED and COO, and of course Raghav Chandra, ED and CTPO, all with us in the studios. Welcome, guys. Congratulations on a stellar debut. All of you much richer this afternoon than you were earlier this morning. I'm going to start by asking, what's the first big thing you're going to spend on?
Thank you. Pleasure to be here, Tamanna. I can't answer. Do you guys have something in mind?
A meal.
Yeah, I think we need a good meal. Yeah.
I was thinking the same.
We have dressing right here, which will give you a 6-course meal.
That's excellent. No, I mean, I think it has been, a dream debut in that sense. But with the dream debut, the expectations also grow manifold now. You can expect a lot of scrutiny in all of your quarterly numbers, etc. So let me start with those basics as well. What is the vision here on now that this capital has been raised? Abhiraj, I'll start with you.
Tamanna, I think it's not lost on us that the success of this IPO and the way investors have showed faith is more a promise of the future rather than where the company is today. We recognize that we are still a very small company in the scheme of things, just about break even last year, less than 1% of the entire home services industry. And, the onus is on us now to work hard, organize this industry, bring standards and quality control for customers, and also help hundreds of thousands of service professionals lead dignified, respectful, middle-class lives, and do it all in a way that it is sustainable, profitable. So we have our work cut off. I think we'll take a bit of break today, but be back on the drawing board tomorrow, and the journey continues. It's a milestone in a long journey.
Yeah, and to add to this, the key from here on, to take it from where you left right now, is the journey continues. And I think that's what investors want to know. What is the path going to look like? Because after achieving break-even last year, the key is sustenance. And from sustenance, it comes to growth. And that's what any investor would look at from a company which is just newly listed. What is that strategy going to look like in terms of sustenance first and then growth?
I think for us, we have 3-4 segments of business. Our core services business in India, which is today at scale and profitable. Our goal will be to continue to grow it well at a healthy clip, continue to grow it profitably, and continue to invest behind the pillars of training, quality, technology. Then we have certain relatively newer businesses, I would call them, starting with Native, InstaHelp, and also our international footprint. Those are today not profitable, but again, our goal will be to keep investing in them and set them up for a successful future. I think one of the things that we take very seriously is making sure that we disclose to investors very, very transparently and clearly how we are building this company and what is the picture as is. And I think that's something that we will continue to do. Bad news will always travel first to investors. Good news can wait, but bad news will always travel first. And we will try to be as thorough in our disclosures as possible so that investors can make judicious decisions going forward.
Okay. Let's talk a bit about the numbers. Varun, I'll come to you on this. You're, of course, EBITDA break even. Do you see that pathway sustainable is the first question. And then what is the margin picture looking like going forward?
As Abhiraj mentioned, the 4 different parts of our business are at different stages of maturity. And we are going to continue to invest in the right pillars for each of these businesses: India Services, Native, InstaHelp, and International. And in the subsequent quarters to come, every time we will attempt to give clear disclosures on where we think the profitability and margins are heading.
No, but is this current profitability sustainable is the question. Do you think that next quarter we see that as well?
I think for the core business in India, we do believe it's already operating at a healthy margin. So if you see the whole of last year, we did about 3% odd as a percentage of net transaction value. And in the first quarter, we did about 4%. And in that quarter, we had not segregated InstaHelp away from the core business, but we did disclose in our RHP that had it not been for InstaHelp, it would have operated at about 5.2% adjusted EBITDA as a percentage of NTV. So it has been seeing a very healthy trend. It was loss-making 2-3 years back. As it has scaled, that operating leverage has transferred into profitability. And I think for the core business in India, given where it is, our goal will be to continue to operate it profitably. I think the other segments, whether it's native or InstaHelp or even international, it's honestly a bit early for us to talk about profitability.
What is the revenue split? You mentioned the 4 segments. If you can just get an idea. Your new company, I think there is a process of discovery also for investors. So in terms of the 4 verticals, what is the revenue contribution?
So FY25, InstaHelp was just started towards the end, so it continues to be very, very small. But FY25, about 77% of the revenue came from India core services, 13% from international, and about 10% from native.
So when you talk about the 13 and the 10, which is 23% of your revenues are loss-making, let's put it that way, right? If you have to look at both of these breaking even from here on, what is the kind of timeline that you're looking at? And when do all engines actually steam up and start firing, according to you? And what would that growth then look like?
Yeah. So if we look at international and native both, particularly international has seen a trajectory of improving revenues and reducing losses. And they've been sustainably coming down. And even in the first quarter, we reported a material reduction in losses as revenues continue to go up. Our international footprint has a very similar, I would say, adjusted EBITDA margin profile and contribution profile as India. Probably a little behind India in terms of maturity, but it will sort of eventually get there. Native is still early. It's yet to complete its second birthday as a sub-brand. I think we will want to invest further. What we are looking to do is, in the first or the second earnings call itself, come out with very clear guidance. We understand that 23% of the business today is unprofitable. Investors will want to know how long will you continue to invest behind them and what is the capital that you will want to deploy before these break even and start generating cash. I think in the first or latest the second earnings call, most likely we'll try to get there in the first. We'll come out with that disclosure.
And I think to that, I think it's going to be Raghav who's going to be asking you to make all the spends as well, right? So Raghav, coming to you on that front, if you're talking about India business which is matured, I'm sure there is not too much of development that goes in from a cost perspective. You're talking about native and international where the markets are pretty much at a nascent stage from a business perspective. A lot of development that will have to happen there. Are you seeing that aspect happen from a product and technology perspective as well? Or is it just going to be an operations angle to it? Because then it'll come back to Varun then.
Absolutely. So how we work has a lot to do with how our tech engines are configured. That's what allows us to scale. We're in a place where launching new cities or new categories, once the playbook is cracked, we don't need to keep rewiring. So, internally teams are kept into focusing for advancing versus just running operations. So yes, international, native, or even India bets, all of this kind of require tech at its core to codify insights, allow them to scale. And that's basically how we work internally.
Just give us a sense of what is the consumer behavior you're seeing in terms of repeat customers, stickiness of the business, average spends, and what is the trajectory there? Anyone who wants to take that one?
We've disclosed over the years, even though the new users on the platform are growing, even then the share of business that we get from our older repeat users, the percentage share, has also been growing. And that is because once users get familiar with the idea of Urban Company app and the fact that it serves a variety of their needs and use cases, we see that users keep trying newer categories on the platform, and thus their spends on the platform every year on average keeps going up. And that going up along with the addition of more new users creates this growth engine that we've been seeing compounding returns from.
Any
even as we
numbers you can
do
share
new
in
things,
terms of percentage of users which come
absolutely.
back?
So I think in FY25, 82% of our net transaction value came from repeat users, users who were acquired prior. First quarter of FY26, that number was north of 85%. And historically, it's been coming up. I think it was early 70s in FY22-23, went to mid 70s in 24, shot up to above 80. And one of the things that Varun pointed out, which we've also disclosed in the RHP, is if you see in the first year, the average user is only trying about 1.5 super categories. I think 1.3 on average. So Urban Company, when they start out, it represents an app from where I get a haircut or an app from where I get a plumbing done, repair done. It represents one thing. Over time, that trust compounds. Then they'll try a second service and they'll realize, okay, it's not just for haircuts, I can use it for this as well. The third category becomes easier than the second, the fourth becomes easier than the third. That trust starts to compound, and before you know it, the user starts to think of Urban Company as an end-to-end home services platform for them rather than just one or two use cases. This trust compounding journey takes some time. It takes a few years for them to try 4-5 different services over time. But once it does, it really creates a powerful, sticky, repeat base and a strong network effect for our platform.
So what is the average customer acquisition cost right now? Are you seeing a particular trend that is emerging where it's now starting to inch lower, or does it continue to remain sticky and high?
Yeah, I think without getting into the specific numbers, what I can share is that it has been steadily dropping for us while the new user count has been going up. And part of the reason is that we operate, people think that we operate in cities, which is true, but we actually break cities into micro markets, smaller units. And in each micro market, as we densify, our service professionals get utilized better. Last year, the average professional was only utilized for about 83 hours in a month. That was the average. But we've seen in dense micro markets that number go up to 125, 140, even 150 hours, which represents taking the utilization from about 40-45% to about 70-75%. Now, utilization is the fundamental cost to serve in our business. It's the systemic cost, which as it comes down, service professionals earn more. They are spending less time traveling between jobs or waiting for jobs. They're spending more time inside consumer homes, so they can earn more. And consequently, as the cost to serve comes down, customers can get better pricing. And with that, our CACs also reduce.
What about your average transaction value? What is the average spend that customers have? Or is that a difficult metric for you because the services are so different versus other platform companies?
No, it's a very broad segment, right? Something like an Insta Help today, which we are fast accelerating, could be for as little as a couple of ₹100, all the way to, now we have painting and wall paneling services, which are running in the tens of thousands. Most of the medium services, whether it's a beauty treatment, haircut, a simple plumbing, electrical job or cleaning, are, I would say anywhere from ₹500 all the way to about ₹2,000 or so. That's the spread.
But are you seeing that spend go up, or the propensity of that to go up?
The spend is, in terms of the total number of transactions that users are doing, it's definitely increasing. In terms of the spend per service, our endeavor with increasing densification is actually not to take the pricing up, but actually offer better pricing to consumers.
I think you have a business model where you do have two aspects, where you have, I think, premium and luxury, if I'm not mistaken, right? What is the margin profile of each, and do you see that shift from premium to luxury happening quickly when you're taking, when a user is taking services? That's number one. And number two, the retention of the service providers also becomes key, right? Because your business model is dependent on the service providers. How do you make sure that they are sticking around with a urban company and not going to anyone else?
You want to take the question on premium? We've actually been always positively surprised by the uptake of the top luxury tier segment whenever we've launched it. Today we've launched it across beauty services for women, grooming services for men, and our massage and spa categories. And every time we launch it, the fast adoption of users surprises us. These start off with users who have been using the platform for some time, who experiment, realize that there is a real upgrade in the products that are getting used, in the service levels that are being offered, and then they feel like they made the right choice to upgrade and continue to repeat in that luxury tier. And while we do not just this, but also what Abhiraj spoke, which is for the same service, we want to keep our prices same or reduce it with density. We do this always while holding true to the value of win-win on our platform, which is we need to take our service professionals along in this journey, and their incomes need to keep gradually going up every year.
So what's the commission
that's
model
largely,
for them?
I'll come to that. That's largely driven by their utilization increasing with every year, both because there is higher density of demand and professionals realize that it's a very meritocratic platform. Their earnings depend on the hours that they give, and we keep guiding them on how to spend their time best and keep increasing their earnings.
Yeah, and coming to the commission model, how does that pan out?
So the commission model is quite simple. I mean, while commission rates vary category to category, I think a rule of thumb you can say is that a fourth is kept by us, and 3/4 goes to the professionals.
Okay.
And so the more they work, the more money they make, the better they get utilized. And beyond the money, the monetary aspect, there are some non-monetary aspects also that we offer. So every professional on our platform, regardless of how many orders they do, get access to a free life, accidental and health insurance cover. Some of our best professionals also get access to free family health insurance that covers their spouse and 2 kids. They get access to formal credit at subsidized rates. There's free training for everybody and certification program. We're helping our women partners now with a project called Project Udaan, where we want all of them to have a mobility two-wheeler solution. We've realized that a two-wheeler owned by a woman partner increases their sense of confidence, their sense of safety, and their earnings go up by about 15 to 20%. We did this study with UC Berkeley. So I think we're quite committed to the goodwill of professionals. And as you rightly said, it's not out of charity that we're doing this. It makes complete business sense for us. Happy partners for us leads to happy consumers, and that's why we have to continue to invest behind their happiness so that we can retain them and they in turn can make our customers happy.
Okay. Absolutely. Very interesting company, very interesting business model, and what a stellar debut. Also very nice to see, young entrepreneurs there making that leap. That's something that we talk about when we talk about a growing India and a new India. Thank you so much, and congratulations, Team Urban Company. Thank you for coming into the NDTV Profit Studios.
Thank you. Thank you so much.
Looking forward to using Urban Company and seeing what it has to offer to all of us.
And speaking to you at the next quarterly results, when the numbers come out. All right, we'll take a very short break on this special program, but we're coming right back with all the latest on markets and tell you about the stocks that are buzzing. Stay tuned.
That's huge. That is a biggie. It's out of
गोल्ड ग्लास क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. The best app to use is the NDTV app.
Hello and welcome to Profit Buzzers on NDTV Profit. Now moving on to an NDTV Profit exclusive. The government may set up special export entities tied to e-commerce platforms. Rishabh joins us with more details. Rishabh, what are you picking up? Because this is a great push when you talk about, the tariff concerns. And this is a story which you got to us earlier as well, that the e-commerce platforms are in conversation with the government as well. This is the next update. What do you have for us?
Right, in a major push for e-commerce exports, the government is planning something. The government has something in store, and very fast-paced meetings are taking place with regards to this particular one. The government is planning a big push for e-commerce exports, and this is going to be tied to special export entities that will be set up, and these export entities will be tied to e-commerce companies like Flipkart and Amazon and DHL, etc. Now, what will happen is that these particular export entities, they will handle the compliance part, the customs, and all the boring stuff, while you'll have the MSMEs, who will be the product suppliers to these export entities. They will be focusing purely on branding, product, and quality. Now, what we'll see is that this will be a pilot project. There will be a few small export entities being set up first before there will be a larger rollout. What we're also seeing is the fact that their talks are on with the likes of Amazon, Flipkart, FedEx, DHL, Peter Groups, as well as the RBI's foreign exchange department. They are also very much involved in these discussions. What we're seeing is that the government is also mulling whether to give these export entities certain GST benefits, certain benefits on par with what other exporters get, such as ROTTEP schemes, certain duty remissions that also come in if you're an exporter, if you're a large enough exporter. What we're also seeing is that there is a plan going ahead to link these export entities with the government's e-commerce export hubs. Those are a part of a separate scheme that was started by the DPIIT. So we're seeing a lot of fast-moving progress take place with respect to the government's plan to push for more e-commerce exports coming out of India and in turn provide boost for MSMEs.
Thank you, Rishabh, so much for that. And this is going to be a great push coming in there for all of these e-commerce players as well. But let me get in Gaurang Shah and Gaurav Sharma as well to talk to us more in terms of what's happening in terms of the markets. Gaurang, first let me come to you. A very good afternoon. We were just talking to the management of Urban Company right now. A stellar listing is what we've seen. What would you advise investors to do? Someone who's already been allotted in terms of the IPO, would you advise to book profits? And two, someone who's not been allotted probably is feeling that I've missed the boat. Would you think this is still the right time to look at an entry point, or would you wait for some correction?
Thank you, Hiral, for having me on this show. Good afternoon to all the viewers of NDTV Profit and to you and to Gaurav as well. A small disclosure before we go any further. All recommendations are going to be a part of our research team recommendations. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest. But we give advice to our clients on similar lines. They might have their investment interest. Now, talking about Urban Company, well, we didn't cover the IPO, nor do we have any standalone report. But I was listening into the conversations that you were having with the management and how they are going to use the proceeds that they have received for the IPO for their business. From the past history, what we can recollect and we remember, Hiral, is that some of these tech/stroke e-commerce companies tend to outperform in the beginning and then they fizzle out. Reasons could be one too many, rising competition, unable to sustain the margins, unviable operational strategies, or unable to garner further clients or market. So I would say that, whether to book profit or not to book profit, Hiral, it's all the, perception that an investor gets invested, whether long term or short term or medium term. But, this listing was stellar, of course, from the level at which the IPO was issued and the way the share got listed and the level at which it is trading. So I would only say use your wisdom and fine sense of judgment.
Okay. Did you feel that you missed the boat?
I am never ever in that boat wherein I feel that I miss the opportunity. In stock market, Hiral, opportunities are plenty. It's not on one stock.
Absolutely. Opportunities are plenty as well. In fact, Gaurav, welcome to the show. Let's just quickly look at markets as well. We are trading higher right now. Good interest coming in from the PSU bank index side as well, because all your PSU banks are firing on all engines right now. Bank of Maharashtra, Canara Bank, you name majority of the banking spaces, good gains coming in there. Would you be a buyer, Gaurav, in terms of the PSU banking space right now, taking into consideration the kind of up move that's coming in?
Hi, Hiral. Good afternoon, Gaurang, and to the viewers. So I think it won't be wrong to say that today the PSU banking pack has completely, steals the show here. From SBI to Bank India to PNB, Canara Bank, you name it, and they are just flying higher. At these levels, also they look attractive as they are. I think still in the middle of the recent run-up that we are seeing. It's going on from a previous week, and I expect another 4 to 5% of move respectively in these stocks. Canara Bank looks pretty good, level close to 118. What we are eyeing at. SBI has just started its recent up move, and a level close to 880, 900 can be expected in the next, say, a week or so. When we talk about PNB, it is also doing pretty well, and a level close to 115 can be seen. So, another what at large I can see is 4 to 5% of up move is still there.
5% up move in the PSU banking space probably does come in there. That's the word coming in. Now let's pull up our MCX, a strong up move that we saw in terms of today's session. If you pull up that chart on the screens, and you'll see the kind of gains, 4.5%. Now, a proposal to consult on allowing FPIs to trade non-agricultural and non-cash settled commodity derivatives is currently under consultation, and that's the word coming in from Tuhin Kanda Pandey from SEBI, that's the SEBI chairperson. Let's quickly listen into what else he had to say about this, as well as about bringing commodity-specific brokers on a common reporting mechanism for compliance.
A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets. By December 2025 end, we will include commodity-specific brokers in the Samohik Prativedan Manch, a common reporting mechanism for compliance reports. This will ease their compliance requirements.
Right, so that's going to be interesting. Gaurang, what do you make of this commentary that's coming in from SEBI chairperson with regards to where commodity derivatives go? The kind of surge that we are seeing in terms of MCX, what would you advise in terms of impact, and what should an investor do?
I think bringing in compliance, accountability, transparency, clarity, bringing in more participants. Fact here is that the commodity market in India is much more less penetrated compared to the equity market. That could be for one too many reasons again. Knowledge is one of the most important things when it comes to commodity market. So without going into specifics of buy, sell and hold, I believe one thing, Hiral, that Indian commodity market and Indian equity markets, both are likely to perform quite well as we go into the future, maybe for the next 3 to 5 years. Efforts made by the regulator to bring in more participant, bring them under compliance gambit, and increase the trading activity will result into higher volumes and higher fees for the exchanges which are associated with the respective market, whether it is commodity or whether it is equity market. So without going into specific of buy, sell and hold, well, MCX happens to be one of the strongest platforms in the commodity market compared to its peers. Of course, with the Indian capital market or Indian equity market also, we've seen how things have changed at ground level and how clarity has come in and more compliance has come in. So if you are of a believer that the Indian equity market and commodity market is going to do well for the next 3 years, 5 years, or maybe more, you should definitely look at this sector with a positive view.
In fact, thanks for that, Gaurang. Gaurav, let me come to you. If you have to talk about MCX, from a high of around 9,100 or little over that, the stock has cooled off. We're somewhere in that range of 7,988. With the fundamental commentary that we're hearing in, are the charts also supporting the up move from here on from a MCX, or do you think this will cool off from here on?
Well, absolutely. MCX is in a sweet place when we talk about the capital market related stock. I think BSE and MCX are the better ones to even talk about. Now, when the technical chart formations are also favorable, as we have seen good amount of profit taking from the higher levels, I think this stock is available at a sweet spot now, and 80 to 8,400 is the immediate upside that we are eyeing at. And I think it will be a little injustice to the other capital market stocks like CAMS and CDSL if we don't talk about these stocks today, as they have also inched up, and they have now a brighter room of a performance coming in. So I think a good room in the immediate near term is left in these stocks also.
Okay, so BSC and you're talking about MCX. In fact, CDSL is another play which is seeing some good momentum in terms of today's session as well. There you go, 1.5% kind of up move coming in on a CDSL as well. But moving on, if you talk about consumption as a pack, there has been weakness, pretty sidewards momentum over the last couple of trading sessions. But one stock that is in action from the consumption pack for other reasons is Marico, which is nearly trading at the day's lowest levels. And this is because Mumbai income tax wing has made surveys at Marico offices. In fact, Charu joins us with the ground report. Charu, what are your sources telling you? You are at the Marico premise in Andheri. What are you picking up so far?
Yes, so we are currently in a Marico office in Andheri. The office is right here, and we have come to know from several sources that the Mumbai income tax wing officials had visited the facility early in the morning at around 10:30 a.m. and there were about 4 to 5 of them. The surveys are still continuing inside the facility, and the phone devices and other devices of the staff members have already been taken. In another lighter anecdote, a few of the people outside the offices told NDTV Profit that some staff members had come out for a while to make calls from the phones of other people who are running shops or are usually near the premises of the office. NDTV Profit had also previously reported earlier in the morning that IT wing is conducting surveys on multiple locations related to Marico, including their manufacturing units, major dealers and offices. This is in relation to certain foreign fund transactions related to the company. We'll come back to you with more details when we have them.
Right. Charu, just a quick follow-up. Anything that you're picking up in terms of what is the reason for these searches and, what's happening right now in terms of the surveys?
So as far as we know, these are in relation to some foreign fund transactions. However, we are not aware of the specific nature of these transactions or their quantum for now. But as soon as we get these updates, we'll come back to you.
Got it. Thank you so much for that, Charu, for getting us the details. Gaurang, any commentary in terms of Marico? I know this is more on the regulatory and the legal aspect in terms of what's happening. But what would you advise investors to do from a business perspective with Marico, and anything that fits your bill from the consumption pack right now?
Well, how do I say it? It's a developing story, right? We don't know the nature of this trade and the nature of the foreign exchange transactions that your colleague was also referring to. Minus that, the FMCG space looks quite attractive, Hiral. Right from the time the Honorable Prime Minister made his statements on 15th of August from Red Fort about the new avatar of GST 2.0, the entire FMCG pack has been buzzing. No surprises that it has taken a step back, a little bit of profit booking. But long term, Geojit remains extremely positive on the sector. We have coverage on Marico, we have coverage on Dabur, Tata Consumer, Godrej Consumer, HUL, ITC, Nestle, Britannia. And our sense is that from 22nd of September, that is next week, Monday, the consumption boost is likely to give it a push, and a large part of a positive tailwind will be visible from October, November, December onwards. So minus whatever news flow on Marico, we have an accumulate stance on Marico.
Interesting, an accumulate stance on Marico right now. Gaurav, very quickly, I want to touch base on two stocks. Varun Beverages, because that has seen a reversal after the kind of pressure in the last couple of trading sessions, and a Tata Consumer is your top nifty gainer. What are charts indicating for these ones as well? Still buying interest, or would you advise investors to book profits?
Let's go talk about Varun Beverages. It's still not out of the woods yet. As far as charts are concerned, there are multiple resistances placed nearby. Stock is trading about 474, 490, 500, 510, 515. Again, multiple resistances around those levels. So I think this stock will take some more time. But when we talk about Tata Consumer, it's completely opposite. This is flying high, and a room towards 1175, 1200 still remains. I think one can still consider this stock from trading as well as for a long-term perspective.
Okay, so that's with regards to Tata Consumers, a long bet coming in there. But moving on, as we celebrate Honorable Prime Minister Narendra Modi's 75th birthday, on the eve of his birthday, we take a look at how primary market has performed over the last decade under his leadership. Samit brings us all the details. Samit, over to you.
Well, yes, IPOs have actually boomed in this period, that is from September 2014 till now. If you look at the number of companies that have come out with IPOs, a total of 445 companies have listed around this period. 2014 was a lull period, just 3 companies since September, but 2015, 21, 2016, 26 companies, 2017 we have seen 36 companies getting listed, and these companies have raised anywhere between 13,600 to 67,100 crore. But wait, much better picture is going to come here, because in 2021, if you see, nearly 63 companies have raised money from the primary market, raising close to 1.2 lakh crore rupees. And in 2024, if you see, this was one of the best year for IPOs. 91 companies have raised funds, a total of close to 1.6 lakh crore. And in 2025, so far, around 53 companies have raised close to 74,500 crore rupees. So a good month, around 445, a good number of years that we have seen for the IPO market. Close to 445 companies is what have totally raised funds so far, and the amount raised is close to 6.4 lakh crore rupees. 2024 was the best year. As I mentioned, 91 companies raised close to 1.6 lakh crore rupees. And if you look at some of the big IPOs that have come in, most of them are PSU companies. Firstly, LIC, 20,100 crore. Hyundai, which is not a PSU company, but that was the company that raised the most amount of funds, around 28,000 crore rupees. Paytm, 18,300. HDB Financial, 12,500 crore rupees. Swiggy, around 11,300. General Insurance Corp, again a PSU company, which managed to raise close to 11,300. SBI Cards managed to raise close to 10,300 crore rupees, and NTPC raised close to 10,000 crore rupees. So companies that have raised more than 10,000 crore, most of them are PSU companies that have managed to raise this funds in his tenure.
Right, so that's with regards to where, the way IPO markets have performed as well in this entire Modi era. But moving on, in fact, let me also, understand what GM Financial had to say as well in terms of the wishes for Prime Minister Narendra Modi. In fact, joining us, we have Mr. Venkatesh Balasubramaniam, MD and Head of Research at JM Financial. Thank you so much, Venkat, for joining us on the show. My first question coming to you is, how do you feel that the policies under the Modi government in the last 10 years have helped the Indian stock market?
See, Mr. Modi became the Prime Minister in May 2014. So post 2014, I think it's been almost 11 plus kind of years. So in this 11 plus years, there have been certain significant reform and reform-based decisions which have been taken. If I could name a few which have had a significant impact on the market on the positive side, the one which comes to my mind immediately is basically the GST which was implemented. So that was a significant event for the market, perhaps the most significant piece of tax reforms in the last decade or so, or maybe ever in India. Secondly, the implementation of the Insolvency and Bankruptcy Code, I think another very significant event in India, which has changed the behavior of promoters in India and cleaned up the banking system in India. Jan Dhan, again, very significant event. I think this was one of the first events or first reform measure which the government took immediately post coming to power. If I remember it correctly, I think they came to power in May 2014 and Mr. Modi took the decision to implement this from July 2014. So immediately, the primary goal was financial inclusion, and that has been implemented very well across the country and has had significant effect. Post that, I think immediately post that in 2014 itself, I think the Modi government again then implemented the Make in India reform process. Now again, Make India did not have as much impact initially, but once the PLI cover was put on top of Make India, basically the production linked incentives, a lot of successes have come over the last 3 to 4 years. So again, I believe a significant bit of event which reform process which has played out. Last but not the least, the implementation of UPI has been one of the biggest events according to me. So these are like 6 measures which comes to my mind immediately, which the Modi government has implemented in the last 11 plus years.
Okay, so which are the 3 sectors that have benefited the most as a result of these policies?
So if you're talking about the recently implemented GST 2, where multiple tax slabs have been reduced to 5%, 18%, and 40%, I think the biggest beneficiary is going to be basically consumer discretionary sector. So something like auto should benefit in a very big way over the next 4 to 5 years because of these new GST rates. So both two-wheelers and four-wheelers should benefit in a very big way because of this. Secondly, I think consumer staples. So there will be a big benefit of consumer GST rates reducing in lots of, both on the consumer staple side and on the food item side. We see things like biscuits, soaps, regular daily use items, those kind of products are getting a very big fillip because of the GST cut. Last but not the least, you could also see a second level impact on a lot of internet companies which are more consumer focused. The likes of, let's say, an Eternal or a Nykaa, they could benefit from increased consumption. We also believe that GST will also have a significant boost to the cement sector because GST rates have been cut even in the cement sector. So these are the four sectors which come to my mind.
Interesting names that you've given out as well. But thank you so much for joining us on the show and sharing the views. In fact, let's also look at how the PSUs have performed under the leadership of Prime Minister Narendra Modi. Somit joins us with the analysis.
Well, as PSUs have seen a big re-rating, and most part of this re-rating happened since August 2023 when Prime Minister openly asked investors to bet and invest on PSUs. So the key sectoral outperformance in the PSU space have been defense, railways and telecom equipment companies. Defense and railways have been the major outperformer. Now if you look at the companies that have seen the highest increase in the market capitalization and growth, firstly it's Hindustan Aeronautics. At one point of time the company was unable to pay dues to its employees, but right now the company's market capitalization stands at close to 3.2 lakh crore rupees, and it has increased at a CAGR of nearly 32% over 2018 till now. For Bharat Electronics, the market capitalization is 2.9 lakh, growth of close to 32% CAGR. Mazgaon Dock 1.2 lakh crore market capitalization, a growth of nearly 103%, and that too on a CAGR basis. When it comes to RVNL, Bharat Dynamics and IRCTC, these companies have seen their market capitalization increase at a CAGR of anywhere between 32 to 53% since their listing. For Cochin Shipyard, ITI, which is a telecom equipment company, Ircon and Railtel, their market capitalization is anywhere between 13,000 crore to 48,000 crore rupees, and it has increased at a CAGR of nearly 22 to 37% for some of them since 2015 and for some of them since 2017. Apart from that, if you look at the financial performance as well, it has been quite strong for all the PSU companies. For Mazgaon Dock, the revenue, EBITDA and net profit has increased at a CAGR of anywhere between 12 to 25% since listing till now. For RVNL and IRCTC, we have seen their financials, that is revenue, EBITDA and PAT, grow at a CAGR of anywhere between 16 to 26%. Apart from that, other companies like Railtel, for which we are seeing a 9-year CAGR growth, it has been around 18%. Revenue and PAT growth has been 26%. For Bharat Electronics and Hindustan Aeronautics, both the companies in the defense space, they have seen their financials, that is revenue, EBITDA and PAT, grow at a CAGR of anywhere between 7 to 19% over 2014 till now. Apart from that, there are companies like Bharat Dynamics, Cochin Shipyard, ITI and Ircon, and those two have seen at least a double-digit growth. Bharat Dynamics here has seen a slower growth, but that is also because of the fact that their business is cyclical, but other companies have seen a double-digit growth in their financials over 2014 till now.
Right. Thank you, Somit, so much for getting us all the details. Gaurang, anything that you feel could see a potential uptick from here on as well? Because PSU profit makers, good names coming in there. In fact, I was just looking at the defense pack. 4th consecutive session of gains coming in yet again as well, from a Garden Reach to a Cochin Shipyard to a BEL. Would you be a buyer? Are fundamentals really supporting the uptick?
So, Hiral, we have coverage on diversified sectors wherein government has its investment interest or has its holding. Just day before yesterday, the Ministry of Defense and Defense Minister Raksha Mantri Shriman Rajnath Singh ji announced a Defense Procurement Manual, a DPM, easing the ease of doing business further and elaborating the Make in India, Made in India transformation that the Honorable Prime Minister had put in place a couple of years ago. So we believe defense sector, cap goods engineering, energy sector. Energy would include both power generating companies and oil and gas companies. We believe public sector banks, strong banks, names like SBI, Indian Bank, Canara Bank, Bank of Baroda, Bank of India, PNB, are likely to do further better. A company like Engineers India Limited, on fallback of the new policy that the government initiated a couple of time backs, that is green hydrogen. I think these are some of the areas where we feel sector-wise government PSU companies are likely to do better in the future.
Okay, so that's the view coming in from Gaurang. Gaurav, what would you advise to do with any of the PSU bets, specifically the defense pack, which is buzzing in trade right now?
I think Gaurang has covered the entire universe. I find difficulty in finding out stocks now what to say. Now, specifically when we talk about PSU and the defense space, Mazagon Dock remains one of our favorite bets along with HAL. And other than that, BDL is also available at a sweet spot now. So these are the three stocks in that order we prefer.
Okay, so that's the pecking order that you're looking at. The other segment that is buzzing in trade is the textile space, where PM Narendra Modi lays the foundation stone of Mitra Park in Madhya Pradesh. In fact, textile stocks will remain in focus on the back of this because a lot of companies will be participating in this event as well. Strong moves coming in there, and plus you're talking about tariff negotiations between India and US, which seem to be going on a positive footing. So two tailwinds coming in for textile companies. Gaurang, would you be a buyer?
Honestly, Hiral, I think we don't have to jump the gun when it comes to tariff-related matters. I think we have to leave it to the government and government's wisdom as to in what form, shape, size, and when this particular tariff agreement is signed. We have made it very clear that there are certain red lines drawn, Lakshman Rekha drawn, which we will not tolerate anybody crossing it over. Having said that, minus what happens to the textile-related tariff that the Trump administration put in, we have coverage on Wellspun Living and Raymond's. These are the two stocks which are under our coverage as far as the textile universe is concerned. But I'll make it again clear, this recommendation is not anything to do with the tariff related matters on the Indian textile sector.
All right, so that's with regards to textiles overall, but completely out of time. Thank you, Gaurang. Thank you, Gaurav, so much for joining us on the show and sharing your views. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers. I'm Hiral Dadia and with me is Somit Sarkar. An interesting day of trade. 0.4% higher. We're trying to be towards the day's highest levels. What's interesting is the 25,300 mark that you're seeing. We've maintained above those levels, and that is what is important because a sustained closure about 25,250 is going to see some buying interest, and that's what analysts are pointing out towards. Let's quickly look at Bank Nifty because over there, the PSU Bank Index is very interesting. 0.5% up move in terms of Bank Nifty. So some bit of outperformance coming in from the banking players. But it's the PSU Bank Index, a 2% up move. If you talk about the contributors as well, majority of your PSU banking space up in that range of almost 2 to 4%. Bank of Maharashtra leading the charts with the PNB, Canara Bank and the SBI, which is seeing some smart gains over there. Let's quickly look at the heat map in terms of Nifty 50 as well to tell you what is gaining. Tata Consumers, 3.5% up move, BEL, SBI, Kotak and Maruti. HDFC Life, Bajaj Finserv, ITC, and the SBI Life. So your life insurance players are slightly under pressure. If you look at the broader markets as well, let's pull up the mid cap and the small cap index to understand where the moves are coming in. If you talk about mid cap 150, 0.2% higher, and you have the small cap 250 as well, 0.5%. So again, your small cap index is outperforming in terms of your broader markets as well. BSE 500, if we can have those contributors, KNR Construction 8% up move, data patterns, Affle, AB Fashion on the back of a new launch. RVNL, I think it's an order win. Wellspun Living. In fact, all your textile players from the small cap or the mid cap space are buzzing in trade on the back of tariff talks which have reinitiated. And you're talking about the textile park in Indore that Prime Minister Narendra Modi is inaugurating, and that is what is giving that a boost. What's trading under pressure? Godfrey Phillips has started to see selling pressure after that surge that we had seen. Britannia, Godrej Industries and Home First, which are down in trade. So a lot of movers and shakers, Somit, in trade today, but it's individual stocks which are firing and no particular trend. Defense, textiles and PSUs are the limelight today.
Yes, thank you, Hiral, for that extensive market check. With that, let's welcome in our first management on the show, Rushil Thakkar, the Managing Director of Rushil Deco. So firstly, to start off with, cheaper imports were an issue for the industry earlier, but with post the BIS implementation, have imports fallen? What has been the industry dynamics when it comes to the supply side, given the fact that demand is yet to meaningfully pick up currently?
So first of all, after the implementation of BIS standards, the imports are now zero, and we see a good market coming up with a quality product with a stronger consumer focus in the market. So we see a good price hike over there as well, where we were struggling for several years to compete with imports. So this was a good initiative taken by the government to protect the MDF and the panel board industry.
Right, sir. But given the fact that demand is yet to pick up in a big way, so are you still saying that despite that the industry was able to take price hikes? And if yes, and what was the range of those price hikes? Any idea on that front?
So we are comfortably taking currently about 5% of the price hike in the MDF sector. And talking about the demand supply, yes, there was higher demand, and also there was a higher supply because of the unorganized market getting bigger in this industry. But now, as we see a BIS standards coming in, it is very comfortably for everyone to get this price hike, and the demand and supply ratios can be maintained accordingly.
Right. So this 5% price hike that you're talking about, does that fully offset the increase in raw material cost that we have seen?
So currently, yes, we see a 2 to 3% approximately hike in the raw material pricing, but that is also just not the way to look at it. We also have to make sure that our overheads are also into the control. So this price hike, what we are taking is very sensibly taken and very clearly it has been flown to the market as well.
Right. So given that you have taken a price hike and that is completely offsetting your raw material cost, can we expect an uptick in margins?
Yeah, margins can be up by 2 to 3%, but additional margins into the business come when you increase the value-added product selling into the market, as well as the utilization of the capacities what have been installed. So we are seeing a positive growth of, despite of having the Q1 fire in our plant, we are still expecting a good capacity utilization of 85% plus in our MDF industry.
How are you looking at your EBITDA margins for the full financial year FY26? Where can we expect that to be?
So Rushil Decor as a company, we are expecting the EBITDA margins somewhere around 12 to 14%. Because of the fire which affected it in our plant in Q1, the margins are still kept to be bit low, but the additional margins will be covered by our new plant set up at Gandhinagar for jumbo laminates. So that is where the majority of the margins will be coming from.
Right. As you were speaking about the different type of laminate, that is jumbo laminate, I believe that this is a very high margin product compared to what the core laminates give you. So if you could give us a breakup of how much margins you generate from a jumbo laminate versus a core laminate.
So core laminate, roughly, if you see the composition, the net, the EBITDA margins stand somewhere around 10 to 12%. Where we go to the jumbo laminates, the EBITDA margins go around 14 to 16%. The product is slightly bit more technical because the markets where these products of jumbo laminates are used are very well developed, and the certifications required for this export markets are really very tough to get. So we have secured the certificates successfully in quarter, and we have started the sales for jumbo laminates by this quarter.
Right. So with increasing push for this product going forward, how much does jumbo laminate contribute to your volumes currently, and say by the end of this financial year, how much will this single product contribute to your overall volumes and top line?
So currently, as we see, there are first 2 quarters were just for getting the certification, and few of the machines set up. The few machines were getting set up. So from Q3 and Q4, we are expecting the sales of roughly around 50 to 80 crores for the jumbo laminates, and the capacity of phase 2 will be, which we have already will be starting in the October month, will be also added to this capacity. So overall, our capacity for HPL or laminate sector will be increased by 2.8 million sheets. So revenues will be accordingly upticked.
Okay, right. So 12 to 14% is the margin that you're expecting for FY26. For FY27, so can we comfortably say that margins could expand further given the fact that more sales from jumbo products will come in?
Yes, so expected turnover from jumbo laminates for the whole year is expected to be around 150 to 180 crores for next year. So accordingly, once the product mix goes up, the margins, the EBITDA margins also go up. So yes, it is positively expected to cater a good margin for next year.
Now coming about the top line, 890 crore is what you did in FY25. What is your target for FY26 and FY27?
So for FY26, we are targeting somewhere around close to 1,000 crores plus revenues in the top line. And for coming to the next, the adjoining financial year, we'll be targeting around 1,200 crores revenue for financial year 27.
Right. And any new product launches that you have planned?
As of now, our complete focus is on the jumbo laminate sales and jumbo laminate setup. So currently for upcoming this financial year, we are not focusing or targeting any new product as of now.
Okay. And any planned capacity expansion either from your side or any other players in the industry which could disrupt the demand supply dynamics?
In MDF, yes, few capacities are getting added, but it will take roughly around 18 months to start the capacity for them. So by the time, I think the current capacities may absorb in the market, and we see a positive uptick because MDF has, as a category, has a growth of 20% CAGR. So yes, we see a good growth for that industry as well.
Right. Well, thank you, sir. Thank you for joining us and explaining the way forward for Rushil Decor from here on. Well, with that, let's also welcome in our guest for the show today, G. Chokhalingam, founder and MD of Economics Research. Mr. Chokhalingam, starting with Rushil Decor, you have heard the management, very strong growth prospects. They are expecting margins to increase. What is your view when it comes to this counter?
Yeah, this kind of business, there are too many in the stock market as well as in the business. There are a lot of organized and unorganized players. So the competition is going to be intense unless this kind of company really evolve into a very big company. There will not be a great attraction. But however, to be fair to the company, yes, they have done reasonably well in FY25. The sales have grown 6%. PAT has grown double of that, around 12%. And the only concern is that last 12 quarters, the quarterly revenue, there is no growth. It is oscillating between 211 to 229 crore. Even the margin from 2022 at the rate of 23%, it has come down to 10%. But however, as I mentioned, two factors are there. One, FY25, there's some improvement. And second, the management is talking about a lot of expansion. And also the valuation also just around 20 PE, not exorbitant. So considering these three facts, things have improved in FY25 and a lot of capacity expansion is happening and the valuation is also reasonable. I would give a hold call and once investors get about 10%, then one can book profits.
Well, another counter that remains in focus is Dreamfolks. The company has said that they will discontinue a domestic lounge service which contributes nearly 90% to the top line. Let's get in Mahima with more details on the same.
Right, so Soumit, as you rightly mentioned, Dreamfolks has announced that they are discontinuing their domestic lounge services, and this actually questions their entire existence because, as you rightly mentioned, around 93% of the revenue comes from lounge services. That, of course, includes both national as well as international lounge. The company claims that the impact will be material. However, other domestic services and global lounge business will continue going forward. They've said that contacts with client will remain active, and they are in discussion with clients on alternative customer value propositions that are in progress right now. But in terms of the airport lounge mix, 77 is to 23 is the ratio of domestic is to international. And as I mentioned, 93% of their total revenue comes from lounge services. That includes both international and domestic. And around 7% comes from non-lounge services. Now, recently management gave its commentary in Q1 as well, saying that they were targeting 240 lounges by 2040, but that is under question right now, considering they are shutting the entire domestic side of business. Services other than airport lounges has increased from 5.8 in FY24 to 6.7 in FY25. We'll have to know as to how the trajectory goes on from here on, because lounge services being the core business in the domestic market is being shut. As per the management, services other than India airport lounge will contribute major portion of their top line going forward. So they were kind of anticipating this as well. Lastly, in terms of recent updates, of course, TFS also terminated their agreement with Dreamfolks in terms of lounge services. And in July, they closed certain programs with Axis Bank as well as ICICI Bank as well. So all of this, combined together, the question rises whether the existence is under threat or what is something that we would want to know from the management as well.
Right. Mr. Chokhalingam, any views on this counter Dreamfolks? The business viability is now in the question, right?
Yeah. So what we are reading now through media is really very worrisome. And stock is already down 75%. This is a major problem in small cap companies where, the customer focus is highly concentrated. So all growth, credibility of last 3 years and market cap build-up, all this got shattered now. So it all depends on how soon they rebuild the business. As of now, the stock trades at around 10 PE on FY25, but it is subject to the condition that they maintain that kind of performance, which is now doubtful after hearing what's all happening. So I would not, buy the stock. in fact, if at all I'm holding the stock, I would, take a bet and hold it and see whether any management capability is there to regain at least some portion of the last business. But otherwise, stay away from the stock.
Right. Another counter that remains in focus is Venus Vibe. Ambit has given a strong outlook on this counter with a buy rating and a target price of more than 2,400 rupees. Let's get in Puneet with more details on the same.
Well, Venus Pipes is in focus after brokerage from Ambit has come out with a positive note on the company. They have maintained a buy target price of 2,432 rupees per share. And there's a key question that Ambit seems to be asking here. They are asking if we are close to the bottom on this particular stock. Let's also look at what the other things they're saying. They're saying revenues have largely remained stagnant over the last 4 to 5 quarters. But stagnant revenues has been despite the positive momentum that we've seen in the export market for Ambit. They've also said that the overall order book has grown almost 2 times on a YOY basis to over 560 crores and highlighted that it gives enough visibility for growth to return over the next few quarters. They've highlighted that the bullish on upcoming capacities which will come in, as well as new product interventions that Venus Pipes will do, and hence maintaining the positive view. Revenue growth recovery as well as market share gains should follow as well. And it's coming at a very important time because just post Q1, Venus Pipe had actually increased their revenue growth guidance for FY26 to 25%. Versus 20% earlier. They also mentioned that the margins should range between 16 to 18% for EBITDA in FY26 as well as FY27. They've said that export remains healthy while the US mix is lower, so you're seeing a lower impact on tariffs, and that's the key positive for Venus Pipes. In terms of finally just highlighting what's happening on demand, they mentioned that domestic should ideally pick up from here, especially in the power sector. That's what the company had mentioned in the Q1 conference call and highlighted that they're expecting good demand for India's stainless steel players. So watch out for this one going forward as well.
Mr. Chokalingam, any view on Venus Pipe? The growth prospects seems to be quite promising. Around 25% growth is what the management is guiding for FY26.
Yeah, so to be very fair to the company, it's a phenomenal achievement in the last 7-8 years. Pre-COVID time to FY25, the revenues have gone up 9 times. Even the profits have multiplied many times, but that was all in price. The market went ahead of what the company would deserve, and that's why the stock has corrected 41%. Now, after 41% correction, it is reasonably valued at 30 PE. But the retail investor should bear in mind that at some point in time, the base effect starts playing out. When you have less than 100 crore revenue and grow to 1,000 crore, that kind of 9-fold increase in 6-7 years cannot continue at all. It's very difficult. That is a very rare event in the corporate world. So I believe that yes, because share price has corrected and the company has given strong growth outlook and order book, maybe 10-15% return is possible. But otherwise, I would not have strong, robust outlook of earning 40-50% return from the stock in the next 1-2 years. So modest return is possible.
Shifting focus to the small cap space, small cap 282% return that we have seen since 2014 underscores the small cap boom under PM Modi's reforms. Top stocks like Olectra and Tanla highlight the growth that we have seen in EV and the digital sector. Let's get in Jasmeet with the stocks that have been the top gainers since 2014 till now.
Well, right. Yes, thank you for that. Let's quickly understand the broader market horizon. Now, when we talk about the small caps, let's understand over the last 11 years, starting from September 2014 up until today, how much return have the small caps given, small cap 250 arena. So we see that the return by small cap 250 stands at 282%. When you look at the compounded growth, that's the annual growth rate, it stands at 14.8% overall. Let's quickly understand the top 10 players who have gained the most when it comes to the small cap Nifty 250 funds. While the best performing, the first one stands at Olectra Greentech with a return of 14,737%. When you look at the compounded return annualized, it's at 56%. While the next one is Tanla platform, then we have JB Motors, then you all have Caplin Point as well. Well, if we look at the Olectra, the revenue 10 years back stands at 80 odd crores, while the revenue for the current year up until FY25 stands at 1800 crore, while the margins they have been maintaining at the same range of 14 to 15%. On the other hand, if you look at the other next 5 stocks which would come under the range of this particular cap of top 10 Nifty 250 funds, we have Newland Lab, we have PCBL, we have HBL Engineering as well as Navin Fluorine. Now talking about the HBL, the revenue has stayed in the range of 1300 odd crores to 1900 odd crores from 2014 up until 25, but they have improved the margins. The margin for particularly HBL stood at 7% back in 2014, and right now they're trading at a margin of 20 odd percent. So these are the top 10 stocks performance under Nifty 250 under given the Modi era from 2014 up until 2025.
Well, let's also focus on another stock, Platinum Industries, that has been buzzing in trade. The stock's up more than 10% in trade. Let's get in once with more details on what could be the potential reason. But okay, but before that, Mr. Chokhalingam, coming to you, there are multiple stocks that were highlighted by my team member here. Have you looked into counters like Electra, HBL, Engineering in the small cap segment?
No, certainly yes. But, the retail investors should understand that, they should chase what is a potential multi-bagger rather than chasing what has already become a multi-bagger. So these two companies have already delivered a phenomenal return and they have become already a solid multi-bagger. So are we going to make, further substantial alpha, which I doubt. So one should reward those entrepreneurs, no doubt. They have done a phenomenal. But for retail investors, I think they should look for some other segments where the opportunities could be plenty rather than continuously chasing, the today's multi-bagger. They should look for tomorrow's multi-baggers. That's my personal view.
Right. Another counter, as I was talking about, is Platinum Industries. That stock's been buzzing in trade. It's up more than 10%. Let's get in once with more details on the same.
Well, yes, let's start with the business of the company. Now, the company manufactures PVC stabilizers. Now, the stabilizer is a chemical additive that are used to protect PVC. They also manufacture additives and lubricants as well. The company products find applications in PVC pipes, PVC fittings, and electrical wires also. Now, if I talk about the developments of the company, now the company is transitioning from the lead-based to lead-free PVC stabilizers. Now, there has been a focus from the Indian government regulations mandating the phasing out of the lead-based PVC stabilizers, and the company has been investing rapidly in the non-lead-based capacity for the PVC stabilizer as well. Let's also talk about the greenfield expansion for the company. Now, the company through its arm is planning to start its manufacturing of PVC stabilizer in Egypt. Now, it's important to know that Egypt does not manufacture its stabilizers and it meets its demand through imports from India, Turkey, Saudi Arabia and Iran as well. Now, the company is investing about 67 odd crores for PVC stabilizer in Egypt for a capacity of about 30,000 million tons per annum. This facility is also in close proximity to the Suez Canal, which will further provide easy and cost-effective logistics for the company as well. Lastly, if I talk about the financials, the 3-year revenue CAGR for the company stands at 28%. And if I talk about the PAT CAGR, the 3-year PAT CAGR stands at about 40%. So this is clearly a positive for the company. Lastly, if I talk about the street cred, now however the performance of the company has been good in the recent past, but if I look at the 1-year performance, the stock has been down 15%. So this is what the overall picture is looking like for a Platinum Industries as well.
Right. IRM Energy is another stock that has hit an upper circuit of 20% after HDFC Securities reiterated its buy rating on the counter. Let's get in Varsha with more details on the same.
Well, thank you so much for that. So yes, the target price has been set at rupees 440. Now let's understand what this company does and why this is buzzing. They sell and distribute natural gas, and if I were to talk about FY26 outlook and what are their targets, so they're expecting a huge volume growth when it comes to their CNG business. So they're going to add 50 new CNG stations when it comes to FY26, while the volume growth for PNG is expected to be soft. Now they're aiming for an EBITDA per unit of rupees 5.25 to 5.50 per standard cubic meter for FY26. And now onto the volume, wherein I was telling you about the volume growth which is expected in FY26. So from FY25 to Q1 FY26, if you see, the volume which used to contribute almost 53% has increased to almost 56%, while for PNG volume it has decreased and it is expected to be soft going forward also. But overall, if I were to talk about the strategic initiatives and data, so agreement with the Red Taxi will boost CNG sales when it comes to IRM Energy.
Right. Mr. Chokhalingam, quickly your view on IRM Energy and Platinum Industries. Should investors consider buying this counter at current levels?
I would not suggest buying platinum. It's still trading at around 36p after 34% fall in the stock, and it's not also not rewarding investors in terms of good dividend. IRM Energy, yes, one can hold. That also corrected a lot, and P is slightly lower at 30, and also the being part of Cadillac Group gives some comfort. So therefore, I would give a hold on IRM and sell on platinum if it further rises 5 to 10%.
Right. Thank you, Mr. Chokhalingam. Thank you for joining us and giving us your perspectives on the stock that we discussed today in the show. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप। The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need. straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome to NDTV Profit. You're watching India Market Close. A good day of trade, Nifty above that 25,300 mark, and that is what is very supportive right now from a trend perspective, because analysts are of the opinion that till the time Nifty sustains on a closing basis above 25,250, that positive momentum could continue as well. We have receded slightly from the day's highest levels, but it's still not that bad as well. 0.3% higher. Let's quickly pull up Bank Nifty on the screens, and then we'll see the advanced decline ratio as well. 0.5% up move coming in terms of Bank Nifty at the day's highest levels, and the gains are coming in from the PSU banking space. If you look at the PSU banking index as well, you'll see the kind of gains that we are seeing on that front. Almost 2% is the kind of upside there. From a Bank of Maharashtra, PNB, Canara, SBI, Central Bank of India, all of them actually buzzing in trade. Let's quickly look at the heat map in terms of Nifty 50 to understand which are the top gainers. You have Tata Consumer Products, which continues to be the top gainer today. Gains of nearly 4% coming in there. SBI, BEL, in fact, the defense pack, 4 consecutive session of gains coming in with defense majors. Maruti, Kotak Mahindra Bank, Trent, Hero Moto. Again, it's more of consumption, which is on the uptick, and it can be from the auto pack or FMCG. Tata Steel is under pressure, HDFC Life, SBI Life, and Bajaj Finserv. So something to do with insurance and financials is slightly down. Hindalco again 0.9% lower. ITC also seeing a very different trend as compared to the other players. If you talk about India VIX as well, that's pretty much at 10, receded by almost 0.9%. So that number of around 10 is pretty encouraging. There you go. A very steady chart in terms of the way India VIX has panned out during the day. Let's quickly look at the advanced decline ratio as well. From morning to now, if you see the chart, pretty much steady. The advances were somewhere close to that 1800, 1900. It's come down slightly, and you've moved towards that 1400, 1500 kind of advances. And from a declines perspective, that has actually increased. You started off the day at around 300. That's nearly become 3 times now. So that chart is also slightly narrowing right now. So that's the trend that you're looking at. But what's encouraging is the outperformance that's coming in from the small cap index, Mahima. And it's a lot of stock specific action that you've been witnessing. No clear trends, but textiles, defense, your PSU pack, all of them firing.
Right. But, Hiral, what you were mentioning about the, advanced decline ratio, I think that is telling us a picture as to how mid-cap 150 is not performing very well. And that narrowing of chart is indicating as to the kind of downtick that we're seeing in the mid-cap 150. It's up around 0.09% as we speak, 0.08% as we speak. But yes, as Hiral mentioned, small cap 250 is outperforming, seeing gains of about 0.5% and very stock specific. There's counters like Red Tape, India Pesticides, DCM, Shriram, Wellspun Enterprises, Garden Reach, KNR Construction, Lux Industries, etc. doing very well in trade today. On the flip side, counters like Dreamfolks, on account of the closure of their domestic lounge services, locked in the lower circuit, down by about 5%. FIAM Industries, Westlife Food is seeing profit booking today, 2.5% down in trade. CSB Bank, Godfrey Phillips also seeing profit booking today, down by about 2%. Sirma, SGS, Time Technoplast, NLC India, etc. On the flip side, are seeing the downtick in trade today. So that's about very stock specific market, of course, and with regards to how the broader end of the spectrum is looking like. But with that, let's also welcome in our guest for the day, Kush Bora, founder of kushbora.com, joining us now. Kush, hi, good afternoon to you. Hiral was mentioning that analysts are suggesting that if we close above that 25-50 levels, the momentum will sustain. Do you think that's possible today as well?
Sure. Hi, Mahima. First, a very good afternoon to you and to all the viewers. Well, if Hiral said it, how can I deny it, right? No, but that's on a lighter note. But yes, she's right on the fact that 25,250 was a key resistance zone on the Nifty. In fact, I did mention that yesterday, a couple of sessions ago as well. Right now, a couple of heartening signs. Let's start with the positives first. Good uptrend. If you see out of the last 11 odd sessions, we've ended higher on about 10 of them. Today also included, assuming we close in the green. So that's on a on a very strong footing. 22,250 resistance that is being taken out. PCR, despite the kind of moves that we've seen in the recent past, up moves, it still sits at a comfortable 1.23, close to overheated, but not there yet. And the most heartening fact is that the put base keeps shifting higher practically every day. And now the heaviest put base is at 25,300, which is suggesting some sort of comfort that the bulls have in terms of writing put options at very near-term levels as well. So those are the positives. Mild caution, if I could put it out there, is the smaller time frame charts, which are now actually seeing overheated territories. So if you see Nifty and Bank Nifty as well, for that matter, on the hourly charts, they've actually gone into overheated territory, suggesting some profit booking could be par for the course. Lots of positives, minor caution. So I would suggest if you have a position, not a bad idea to continue to hold. But if you wanted to initiate a fresh one, it will be a good idea to buy it on declines. So maybe closer to 25,200 or thereabouts, a 100, 150 point dip perhaps from here would be a good entry point on the Nifty. I think the star of the show remains Bank Nifty. 11th consecutive session of gains today, assuming, of course, we close in the positive, but, going great guns. Now coming up to the resistance of the 55,500 zone, the 50 DMA. So maybe some profit booking here also advisable. Buy on dips is the strategy. 54,800, 55,000. If you do get it around those levels, that would be a good entry point on Bank Nifty as well.
Okay, that's interesting in terms of the gains that we've seen. Buy on dips should be the strategy. Kush, a quick view in terms of your top picks. And in addition to that, if you can just highlight what one should do with the PSU banking space, because that is what is also firing today.
Oh, absolutely, Hiral. If you'll recall, this is exactly the discussion that I had. In fact, I think Mahima will also recall that, on Ask Profit, when we were asked about a couple of banking names, my suggestion was rather than buying likes of Kotak and Axis, you're better off buying PSU banks like SBI, PNB, which had started to see short covering bouts about 10 sessions ago and could gain momentum. And we are seeing a continuation of that, and and a perfect example of that today as well. Now they're coming close to slightly overheated territories, although the volumes that have happened yesterday and today on some of these names are encouraging. But I would suggest that if you did buy them at lower levels, book partially, continue to hold the rest, don't let go, because the rally could just well be starting. So that's the view on PSU banks. As far as picks go, both of them on the long side. Incidentally, one of them is from the banking space. That is the Indian bank stock that I'm referring to. Just 5 sessions ago, on the 12th of this month, we discussed Indian Bank as a buy call with targets of 712 and 730. The first target has been hit today. The stock's actually at all-time high levels and gaining ground. Volumes also very healthy today. So if you have a position, continue to hold up the targets to 730 and 745 now. And the initiation price of 695 becomes your stop loss. And if you did buy it, it becomes a trailing stop loss. The other one is GVTND, GE Vernova TND. About to have a rounding bottom formation breakout, but with the kind of moves that it's made over the last 3 days on the back of good volumes, taking support of the 20-day moving average. This one also is a buy. Near-term targets 3,000, 3,075, 2850 is where you place that stop loss.
Okay, so that's with regards to where the PSU pack goes and the topics coming in from Kush. But let's quickly pull up Vedanta on the screens and see what a Vedanta is doing in trade, because the stock has nosedived as we speak, and this is on the back of the hearing that was in the Mumbai High Court, which has been deferred right now. And this is the demerger hearing, not having much details on the same yet, but the stock is at the day's lowest levels with cuts of 2.5% coming in there. It's interesting to see what's happening on this one, because the demerger talks, Mahima, have been ongoing for quite some time. And overall, if you talk about the timelines as well, the last update was that the NCLT had actually deferred this hearing to the 17th of September. This was done at the end of August 2025. Okay. And now the hearing is again deferred to the 8th of October. And that's the latest update that we're picking up so far. The pressure continues in terms of where the stock goes. Kush, a quick one. What would you advise investors to do with a Vedanta?
Stay out for now. Off late, the stock has actually seen far higher degree of volatility. Although, if I were to cut some slack, for the stock, most of the metal names today, you look at the likes of Hindalco, Tata Steel, JSW Steel. After a good run, a lot of them are already seeing pressures and cuts of about 1.5%. This one on the back of the news that you said slightly deeper. So my suggestion would be avoid this. If you still want to stick to the metal pack, JSW Steel and Tata Steel are the preferred ones. So stick to those names. Right now, the profit booking is underway. So maybe at slightly lower levels, you could consider JSW Steel and Tata Steel. Avoid Vedanta for now.
We also have Parag Thakkar for Capital joining us now. Parag bhai, very good afternoon to you. Hiro was just mentioning as to the timelines of this Vedanta demerger, and this is the third time that the hearing is deferred. The last update that we had was on, the NCLT saying that NCLT ordered rejecting the demerger of TSPL and post cases for the hearing on 4th of August. But since then, we are hearing only deferment of the cases. Your view with regards to how investors should react right now to this?
Sorry, I think I will not be able to give you a view on Vedanta because we don't hold it in our portfolio.
No worries. Parag bhai, your view on PSU banks. We've seen a stunning rally in all of these counters. Your preferred pick there?
So basically, as we have discussed earlier, SBI, PNB and BOB are the PSU banks which we hold in the portfolio. We remain constructive. In fact, our channel check suggests that this quarter, PSU banks might surprise with a very, very minimal NIM compression. Decent growth, and as usual, asset quality will hold on very strong. So although there is a good rally which has happened last 5-6 days and it is continuing today, so we are not chasing it today, to be very frank, but we would like to hold on because we see a long-term structural rally in PSU banks. And just to add to that, even in as I had highlighted in my last interview, that up till now, after the GST cut, only auto sector and auto component sector had seen a massive run. And now the market it was high time that market should shift to second order thinking, which is financials. And within financials, I also remain extremely positive structurally from long-term perspective on HDFC Bank, which is our very large holding, because of the fact that now that CD ratio is below 96%, market is flushed with liquidity with CRR cuts. HDFC Bank is best positioned to gain after the GST cut led demand surge, which will happen after 22nd September. HDFC Bank is present in every nook and corner of the country. They have a huge number of branches in tier 2, tier 3 towns and rural areas also, and in all auto dealerships. So I would say that HDFC Bank is all set to grow at industry rate in FY26 and above industry rate in FY27. Stock is just trading at 15 PE on FY27. And only 2 times price to book, which is historical low. And now all the problems of CD ratio being high, liquidity being too tight in the system, deposits not coming to the bank, to all the banks, I would say, all those problems are behind, and now the big positive turnaround is in the making.
So Parag bhai, would you say HDFC Bank would be your top pick in terms of where the private banks go?
Absolutely. HDFC Bank is
we'll revisit the banks again, but it's time for a quick segment where we have the stock of the day, which is MCX. In fact, the commodity exchange, if you see the stock chart, has made some smart moves after SEBI Chief Tuin Kanta Pandey hinted at allowing banks FPI in commodity trade. Varsha is here with more on that. Varsha, over to you.
Well, thank you so much for that. So yes, SEBI is actually widening the participation when it comes to commodities market, and that's the reason, SEBI chairman said that they are considering to allow banks, FPIs and pension funds to, trade commodities. Now, this will lead to a good higher liquidity and higher volumes, and MCX would be will actually support this MCX long-term growth. Now, talking about what does existing regulations say, banks and pension funds are not allowed as of now, to participate in commodities market. When it comes to FPIs, they are restricted to cash settled non-agriculture derivatives only. When it comes to mutual fund, they are allowed, but they do have limitations when it comes to their specific investment. And now these are the current existing rules that we have. Now, what does the new regulation mean for banks? They'll be able to hedge their commodity loan portfolios. When it comes to pension funds, they can actually diversify for risk management, and this opens a new asset class for them. When it comes to FPIs, they'll be allowed to trade in physical settled contracts. And now, considering how this will benefit exchanges as a whole, as I said, there will be more volumes, there will be more transactions and good liquidity, and more volumes will actually attract new products. There will be new product launches as well, and this will actually improve liquidity, and so there is a vicious cycle when it comes to these transactions. Lastly, how MCX will benefit. So the current contribution from these segments is negligible, as I said, because they are not allowed. But overall, if you see, FPIs contribute almost 7% to the overall turnover when it comes to MCX. But MCX will benefit because considering the 90% market share that the MCX has. And so this is the reason, because of SEBI's considering the widening participation when it comes to commodities market, MCX is actually gaining when it comes to trade today.
Thanks, Varsha, for that. In fact, with the MCX, Mahima, from a CDSL, BSE, all of them are seeing a good run, and the capital market play probably is the one which is gaining traction over the last couple of trading sessions as well.
And probably that is on the expectations that markets from here on will just see momentum and low downfall, and hopefully that is what we see going forward as well. But Kush, quickly, your view on the charts for MCX?
Not so encouraging. MCX has been on my short call, candidate list for some time now. We did initiate a call. The stock has underperformed for some time now. If the team could just pull up a 3-month chart of MCX, you'll very clearly see that the peaks actually make. Yeah, there you go. Fabulous. You can very clearly, without even a proper technical indicator, you could see a falling trend line resistance. The 8,000 mark is proving to be a bit of a stiff resistance. The high today also around the 8,035 mark, and then profit booking from there suggests that near-term pressures could prevail. Call option right up also at that 8,000 level. If, however, in the coming days, if it is able to close above that 8,000 mark, I won't be surprised to see a spring up to another 3 to 5% move. So 8,250, 8,450 could be on the cards. But don't preempt that. There has been some selling pressure on MCX. Wait for a convincing close above the 8,000 level, and then perhaps you could initiate a trade. Not now.
Okay, that's regards to MCX. Parag Bhai, how are you looking at the capital market play and the commentary that we've been hearing from SEBI chairperson with regards to expanding, the pool when it comes to investments in commodities, and to increasing the compliance as well? Would you be a buyer?
No, basically, I will not chase the momentum at this moment. Of course, if the banks are allowed to trade in commodities through this MCX and other exchanges, it is a big positive because that will increase the volumes. And it's a great business to be in, but the stock has also rallied a lot. And as Kush said, that this is not a right time to chase the momentum. And of course, all capital market stocks will do well definitely when market outlook is good, right? And market outlook has improved after the communication between US and India has improved. And of course, which should have improved significantly after GST cut, which it has. So I would say that I am not a big believer of capital market stocks anyways. So I'll not chase the momentum.
Parag, you were talking about HDFC Bank, and there was a Jefferies note also that had come in today with a target price of 1,200. They're also saying the same thing, right? Asset quality is stable, it's improving, loan growth guidance also stays. To take your point ahead further, what makes you constructive or bullish on that particular counter, HDFC Bank?
See, I'll tell you one good thing about HDFC Bank is that they've always maintained top class asset quality across the cycle. If you see 2007-8 cycle where many other banks and financials lended to power plants without coal and lended to many other real estate players, and all actually became NPAs. So across the cycle, they have kept away themselves from any euphoria, and they have not chased high yielding loans at the cost of asset quality. That is the DNA of the bank, which I love the most. The bank had I would say last 2 years of little bit of tough time, because when they wanted deposits, there was a tightening, and there was a liquidity deficit in the system. Now all those things have faded away. Now they have a CD ratio which is under control, which is below 96%, and banking system is flush with funds due to CRR cuts, which are rightly done by the RBI. So I would say the stage is set, and I'm not saying from Q2 perspective. Please be aware, and I would like to say to all your viewers also, this is a long-term structural high-quality bet at a very, very reasonable valuation, and stock has not done anything great in the last 3-4 years because of these issues, which were actually not created by them. Actually, when the merger was done, they had to bring down CD ratio from 110%, so they are not growing. And liquidity was also absolutely tight. So now that CD ratio is in favor, liquidity is good, GST has been cut. So from Q3 onwards, I see them firing on all cylinders with top class asset quality. And valuations are very, very compelling. Where do you see PEG of 1 in the market? HDFC Bank right now, next year EPS is around 57 rupees.
Correct.
And if you reduce the subsidiary value, it's trading at exact 15 times. It can grow at 13-14% from next year.
Understood.
So PEG of 1.
So I think a compelling bet coming in for a HDFC Bank. Very quickly, how are you seeing a SBI if you have to pick a HDFC versus a SBI?
So I have both. I like both. From near-term perspective, definitely there are more triggers in SBI. See, today they got this 8,800 crore from Yes Bank stake sale. They have already raised 25,000 crore from QIP. Their margins will be more resilient this time. The growth will be more. They have got huge value in their subsidiaries. So it's a large weight for us. And I would say that it continues to be. But after such a massive rally, as you know, I am not a buyer in this kind of momentum. While HDFC Bank has not shown any momentum. And I am seeing, because the Q2 might be the last quarter of slow growth plus some margin contraction. So people are staying away from it. So that is where I will buy today.
Right.
And from Q3, I feel HDFC Bank will start performing in a big way.
Okay. All right. The other pack of stocks that is in focus is the textile companies. Now, PM Narendra Modi lays foundation stone of Mitra Park in Madhya Pradesh. Textile companies have remained focused on the back of that, and we're seeing gains in a lot of these counters that will be participating in the event. And Jasmeet is joining us to give us all those details as to why is this important for textile companies. Jasmeet, what are you picking up?
Well, right. Yes, thank you for that. Now, as you rightly said, this PM Mitra Park is a proposal of 23,000 crores and spread across 91 odd companies. Initially, 114 companies, but now we have 91 companies contributing towards it. We also have a couple of major listed players of textile who have contributed the land and the money for this particular project. Now, if you see Vardhaman Textile, they have invested 2,000 crores for a land worth 190 acres. And on the other hand, we have Trident, which has invested 4,800 crores for a land worth 180 acres. Now, what is this park and how will this benefit textile industry in large? While this park would help textile industry to go and modernize their techniques and reach global level, given the recent tariff impact, they would want to invest and push textile to reach major countries so that the entire risk is diluted. Now, well, this will also help them create major jobs. So the initial direct jobs are 1 lakh per park, while if you look at indirect jobs, they will give employment to 2 lakh plus people going forward. Now, if you look at the other set of news, and which would help you understand why the textile stocks are in focus, well, this comes in after the India-US have started their negotiation for trade tariff again. Now, initially after the 50% tariff, they had impacted majorly textile stocks, given that major textile players import a lot of the items to US. And 50% tariff, they would again get strangled by the competition and would not be able to proceed as prior. So that's the reason why the stocks are buzzing, given the negotiation talks are in progress. So it's something to watch out for how the negotiation turns out and how these stocks get focused in again.
Lots of news and lots of buzz around textile companies as well from here on. In fact, Kush, any charts that tell you where you would see further momentum from here on and which could be buy recommendations?
So two stocks stand out. A lot of them have done well in the last 15 odd sessions, but two stocks that stand out even today. One of them is Wellspun Living. Good moves on this one, very healthy volumes, key resistance levels of the past 5 sessions taken out. I think further upsides to about 135 and about 143. cannot be ruled out. Supports near 122 to 120 zone, so risk reward ratio still fairly favorable. And the second one is GoKex, Gokul Das Exports. Here too, very similar structure. Near-term resistance is taken out, 50-day moving average being cleared on the back of very strong volumes today. There is a gap on the upside near the 890 mark that could perhaps come into play for with the kind of run that the stock is seeing currently. So that will be your target. And on the downside, you can keep a stop loss near the 790 mark. So here too, fairly favorable risk reward ratio. So Gokul Das Exports and Welspun Living, these two stand out. A couple of other names also, but they're seeing resistances. So we'd perhaps skip that discussion for now.
Parag bhai, anything that you are liking in this space? Because on one side, UK FTA was positive. There is EU FTA also under negotiations, but US tariff still remains as an overhang. But India has high aims when it comes to textile exports. $100 billion is something that they're expecting by 2030. Anything in the space that you're liking?
So basically, see, I will tell you, the communication between India and US has definitely improved. And I am also hoping that this tariff is reduced as soon as possible, because that will prevent many job losses also in jewelry and textile segment. But I would say that I don't want to take such a bold call right now after a rally that it is going to happen in a very short term. So I would like for correction. But of course the stocks which Kush mentioned, of course those are in my radar also. Whether it is Welspun Living or Gokul Das Exports or Vardhman Textiles or Lakshmi Machine. These are the stocks which are under my radar and which I would like to buy on dips. But definitely after such a market nowadays moves on narratives, right? So market has taken a narrative that tariff is going to be reduced for sure. But I would like to see more clarity on it. And just to be on the safer side, right now, I would like to buy financials like, for example, City Union Bank is a bank which is perceived to be a textile lender or MSME lender. But our channel check suggests that there is very, very limited exposure. They are doing extremely well, 15% growth, 1.5% ROA, PE is just 10x. So I would like to bet on such names which are perceived to be, having problem, while actually there is no problem. So I would say that something like those names are, or for example, in a capital goods, as we mentioned last time, a stock like LG Equipment, which has 25% exports to US, and that stock has corrected 25-30%. Excellent quality promoter, debt-free balance sheet, high ROC business, and across the cycle delivered fantastic ROCs. And so I would like to say that I would like to buy City Union Bank or LG Equipments of the world, even if this tariff is about to reduce.
Right.
Yeah.
Right. So that's with regards to banks. But thank you, Parag bhai, so much for joining us on the show and getting your views with regards to what's happening with the banks as well. Kush, stay with us. As we slip into a short break, let's look at some key questions. What will drive the next leg of growth in India's story, and how should retail investors, plan their strategy from here on? Let's listen to the cupboard coming in from Christopher Wood, Global Head of Equity Research Strategy at Jefferies.
Are in place. The RBI has already eased a lot. I don't think the RBI needs to slash interest rates dramatically more, because they've already eased policy a lot, and you don't want to undermine the currency. So I think basically the policies are in place.
Chris, we're also speaking on the occasion of Prime Minister Modi's 75th birthday. And some of the programming that we're doing today is to look at his government's policies and the impact they've had. You've been vocal about what this government has been doing and the impact of its policies. Anything you'd want to add there?
Well, no, I mean, just there's obviously been dramatic progress in India under this government. That's just obvious. So if I had to say one obvious area is the huge pickup in government capex, which has created huge improvements in infrastructure and therefore, created a much better framework for the private sector to operate in.
In terms,
I think another area to mention is the bankruptcy reform process, which appears, obviously it takes time, but that is a major change in India. Another major dramatic change has been the Real Estate Regulation Act, which I think creates a much more sustainable property cycle than we saw in the past. So those are three specific areas I've mentioned. There are many more though. And obviously GST is another example.
Yeah, in fact, Chris, for a lot of people, GST 2.0 was arguably one of the biggest reforms. So one big bang reform done, RBI cutting rates as well. What else would you want, let's say, over the next 12 months from the Indian policymakers?
Yeah, but when you talk to the policymakers in this third term of the Modi government, there's been a lot of talk about addressing what I've heard referred to as regulatory cholesterol, thereby improving the ease of doing business in India. So it's easy to talk like this, but clearly I think the government's extremely focused on this. And that I think is a very healthy focus. And that's something that's can't be done just by pressing a button. But everything I'm hearing makes me think this government's very much focused on this whole issue of ease of doing business, which can only really be implemented at the bottom-up level.
A decade of bold reforms, market-moving decisions, and global leadership. This 17th September, India's most transformative leader, Prime Minister Narendra Modi, turns 75. His decade of change shaped the economy, markets, and world's view of India. What do business leaders and millions of Indians say about the Modi era? Catch all about Modi at 75, India Rising. Only on NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. the best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Welcome back. You're watching India Market Close on NDTV Profit and celebrating Honorable Prime Minister Modi's 75th birth anniversary. Joining us to give his wishes and describe what this Modi era actually means for the government, for India Inc. Joining us is Dr. Arvind Panagaria, Chairman at 16th Finance Commission. Dr. Panagaria, welcome to the show and always a pleasure to speak to you. My first question coming to you is, we're talking about Honorable Prime Minister Narendra Modi's 75th birthday today, a Modi era which is in the making or already made so far, 11 years that we've already spoken about. How would you describe this entire phase and what would you have to say?
Thank you, Maima. Really pleasure to be here on the 75th
I'll just correct, this is Hiralia.
Okay. Hi. No, I think a great pleasure to be speaking with you on the 75th birthday of the Prime Minister. I think this is this has been quite a ride for 11 years. And India really stands very transformed. I like to describe Prime Minister Modi as a holistic Prime Minister. You know, he's not, a few major agendas for policy or for development and so forth, but he really is holistic. He looks at everything, and this is something I kind of learned from the very beginning when my interactions with him started around in 2012 or 2013. He worries about the infrastructure, he worries about policy reform, he worries about defense, he worries about foreign policy, internal security, Northeast development, sports, you name it, roads, ports, airports, railways, digital infrastructure. It has been a remarkable 11 years of transformation. And he really started, if you remember, in his initial years in the first term with this idea of Sabka Saath, Sabka Vikas. And, 11 years later, indeed, if you look at, as an economist, one of the things I look at is what has the government done for poverty reduction. And it's quite remarkable, the numbers that you get. Poverty 2011-12 was something of the order of about 22% nationwide, using the Tendulkar poverty line, which is what we normally use.
Right.
It's now down to 3%. And there has been a reduction in poverty all around. Whether it's Hindus or Muslims or Christians, Sikhs, Jains, or another way, scheduled caste, scheduled tribes, OBCs, all around, I've done all the numbers because this is a subject I study very closely. And there has been massive reduction, so for the Hindus, poverty fell from 22% in 11-12 to 3% in 23-24. For Muslims, it fell from 24% to just 2%. For scheduled castes, it fell from 30% to 3%. OBCs, 21% to 2%. So, there's been all around progress. And that is what a holistic Prime Minister really does.
And I 100% agree with you, Dr. Panagaria. Mahima also joining in. Just want to understand with regards to the recent reforms that everybody in India is talking about, that is GST 2.0, and not just that, the kind of reforms that have happened over the years under his reign. Your new IBC code, your Jan Dhan Yojana, there are PLI benefits that have come in, tax benefits, rate cuts, and so much more, right? That have had impact on India Inc. Your view with regards to all of these reforms. And a second part of that question would be, what more, is India planning at the whole level to achieve that Viksit Bharat mark by 2047?
Right. So for the reforms that have already happened, you rightly mentioned, the GST reform, the IBC, the bankruptcy code. We also had, by the way, a major reform of the corporate profit tax. The rates were brought down from close to about 30% to 24-25%. The second GST 2.0, of course, another major reform. Don't forget the personal income tax reform, where in the last budget the exemption limit was raised to about 12 lakh rupees. There's been all around, and the impact of it can be seen in both growth and, as I mentioned to you, different poverty reduction numbers. So all that has happened. On what is to come, I think the next big thing that I am expecting is what would happen as a result of the ongoing trade negotiations. Now India is very well poised. It's already underway, that it is going to be home to many of the multinationals in the way that China became in the 1990s and 2000s. The same process is underway in India currently. And so we need these free trade agreements, which are being negotiated currently, both with the United States and European Union. Some have already been done, the one with the UAE, Australia, these were done earlier. But the two big ones will be the one with the United States and the other with the European Union. Those are, I think, going to be two very big reforms, in my opinion. It'll really create a marketplace without any friction, which is incredibly large. You could move goods between the United States, European Union, and India once these agreements are in place without any friction. So that is going to be a big deal, and for any of the multinationals, that would actually make India an incredibly attractive location, because India already has a very large labor force, both skilled and unskilled. So we got that resource there, and it's an open economy. But what we need now, as in kind of next level, is the free trade agreements with these two entities.
Okay. That is interesting. And how are you assessing India's current position in global trade? Where are you seeing the opportunities? Because all this while we were talking about China +1 as a strategy. Bilateral talks with regards to China have also started. Tariff negotiations, pretty much we are seeing some positive commentary that's coming in from both the sides, US and India. Where do you then see India fitting in now?
So I think I'm very pleased to see that, there was some bit of derailment of the negotiations, but negotiations are back on track. I'm sort of very hopeful that the agreement with the US will be concluded. And if that happens, then I think, also the agreement with the European Union will become more likely. So those are the two, and that really places India incredibly favorably, pretty much in a situation in which China was around early 2000s, because we got the massive workforce, as I said, both skilled labor force as well as less skilled. So we can really cover whole spectrum of industries, labor intensive, starting from apparel and footwear all the way up to the most capital intensive industries, aircraft and and machinery and pharmaceuticals and whatnot. So I think the market will enlarge, and this is what will give us the big kind of jump, both in trade and in growth.
Okay. And my last question coming to you is the roadmap to 2047. What is the kind of growth that is needed to achieve that outcome that Prime Minister Modi has so far? And from here on, what is it that will lead to that 2047 kind of agenda?
Yeah. So, the reforms that we've been talking about, we also need perhaps some reforms in the labor markets and some reforms in the land markets. In India, land tends to be rather expensive, urban land in particular, which is where the industry locates itself. So I think the states are doing, some Andhra Pradesh, Uttar Pradesh, some of these large states, Telangana, Gujarat. So they've been doing, but we need a little bit more on land side so that land becomes a little less expensive for the business enterprises, and some labor market reforms as well. But I think if we do all that, and some bit of deregulation will be required, which is on the radar screen of the government. The government has appointed these committees which are looking into what can be done. So we'll be well on our way. The kind of growth we will need, we'll need about, in dollar terms, in real dollars, we'll need a growth rate of about somewhere between 7.5% and 8%. But this is something that we have done. If you look at our history from 2003-4 to 2017-18, we easily did more than 9% growth in real dollars during that period. So all we need to do really is the next 2 decades, if we repeat what we have done during this period of 2000, just until before COVID. COVID, we declined a little bit, but we still did about 7.5% in real dollars. So we are pretty close. We have done the kind of growth that is required over the next 2 decades. So it is most certainly well within our reach. It's not something, that we have not done in the past. We have done it in the last 2 decades.
Absolutely. Growth, something which is achievable, reforms on the radar as well. Thank you, Dr. Panagaria, for joining us on the show. And it was a pleasure to speak to you as well on NDTV Profit. But moving on, staying with one of the reforms, we are talking about GST 2.0 right now, where the policy or the mandate was the GST rate cuts are coming, and this has to be for the benefit of the consumers. The price cuts that were anticipated have started to come in yet. Heritage Foods is one of the companies that we're looking at, and I think they've taken price cuts already, and that is the news that we've picked up so far owing to GST reforms. We have Srideep Kesavan, CEO of Heritage Foods, on the phone line to talk to us about the same. Mr. Kesavan, welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, well within the timeline, 22nd of September is when GST 2.0 was expected to be rolled out. You've already started taking price cuts. If you could give us more in terms of what is the quantum that you've started and in which all products?
Thank you. Pleasure to be on your show. It's an immense opportunity for all of us in consumer goods, especially in the dairy segment. And I say this because dairy is one category which touches 100% of all Indian households. So while GST reforms impact so many various categories, but I guess dairy probably has the biggest impact because of how broad-based it is, and the frequency of purchase of dairy products are so high. We have already announced that we will be passing on the entire benefits of the GST rationalization to the consumer, and we have already started preparing to take productions so that on 22nd of September or a day before, we have these new prices on the shelves. As per the GST Council's decision, the products that are primarily benefited are, first of all, is paneer and UHT, which is long shelf life milk. It's not the fresh milk, it's a long shelf life milk. And paneer have moved from GST rate of 5% to 0%. With this, we at Heritage, we are expecting the paneer prices to drop by 24 rupees a kg, and the milk in Tetra Pak to drop by 3 rupees a litre. From 75 rupees, our prices will be 72 rupees going forward. Similarly, a very big win has been on ghee, butter and cheese. Across ghee, butter and cheese, the government has rationalized the GST prices from 12% to 5%, and such a festive cheer because it comes in such a timely manner just before the Dussehra festival, where people would be buying ghee and butter in quite large quantities. And the prices across ghee, butter and cheese, we expect to come down by 50 rupees a kg.
Oh, interesting, Srideep. Srideep, hi, Mahima also joining. Just want to understand, this is all your value-added products that you talked about where price cuts will be seen. But with regards to regular milk, there will be no price cuts is what I'm understanding. And this is something that consumers are generally very price sensitive also towards. Just wanted a sense there. And secondly, your any kind of impact because of this change on your business from a shorter term perspective?
Thank you, Mahima. So first of all, GST on regular fresh milk, what people buy on a daily basis, was already at 0%. It was already a beneficiary of nil GST, so there is no impact on that. The prices continue to be as before. The impact will be on long shelf life milk, which would be a game changer for us in the long term. Maybe the impact may not be immediate. You know that in the peri-urban and tier 2, tier 3 cities, many of the consumers actually depend on long shelf life milk where fresh milk may not be available. And we expect with this 5% GST cut on that, serious expansion can happen into those urban, newly coming up urban areas over many years to come. But other than that, you're right. The impact is basically on 3 buckets, which is long shelf life milk and paneer from 5 to 0, ghee, butter and cheese moving from 12 to 5%. Like I said, it's about 50 rupees a litre would be the benefit consumers have. And we have ice creams, which have significantly moved from 18% to 5%. So we are actually expecting a significant cheer on ice creams as well, especially ice creams that people buy for home segment, for home consumption. Like, for example, we have close to 100 SKUs on ice creams. Right. If I could just talk about one of the SKUs, like, price could come down from 160 rupees to 140 rupees MRP.
Okay, interesting. All right, Srideep, thank you so much for coming to us at such a short notice, and of course taking up the time and speaking with us. Thank you so much for that. All right, viewers, it's now time for the Heard on the Street segment. As always, my colleague Soumit Sarkar is joining us with all the chatter from the dealing room. Soumit, what are you picking up today?
Well, firstly, it's on comments, and dealers are indicating that there are sell flows on institutional desk on expectations of weak export data that has come in for comments. So there are some sell flows on institutional desk at higher levels. For Genius Power, there are the buzz on the street is that there could be a potential block deal, and hence some sell flows have been seen on HNI desk. For Gujarat Fluoro, the block deal was today by the promoter side. The deal happened at the lower end of the price band. The demand was not that quite strong as what dealers are indicating. And among mutual funds, only Axis Mutual Fund and Mirai were among the prominent buyers for Gujarat Fluoro's this block deal. So keep an eye out for Gujarat Fluoro. The block deal data that will come out post-market will be important to track. For Bajaj Finance and ITC, dealers are indicating that there are sell flows on large HNI desk. Dealers indicate that some negative news flows is expected in both these counters in trade. So keep an eye out for Bajaj Finance and ITC. For Kalyan Jewellers, there are buy flows on DI desk. Mutual funds have been buyers in this counter in trade today. The dealers are also indicating that the company has given strong commentary in one of the non-deal roadshows that was held today in Singapore, and that's the reason we are seeing such kind of a move where it comes to Kalyan Jewellers. And lastly, when it comes to Samvardhana Motherson, smart investors have started adding positions in this counter at lower levels, and dealers are indicating that they're expecting a returns of close to around 25 to 30% over the next 3 months. So keep an eye out for Samvardhana Motherson as well.
Thank you, Soumit, for those names. Gujarat Fluoro is an interesting one as well on the back of the block deal that Soumit was indicating right now. The demand is not quite strong. That is what is coming out so far. And Kalyan Jewellers as well. Strong commentary and strong moves on that one. Kush, anything that actually you think could be a good opportunity, either a buy or a sell, from all the Heard on Street stocks that Soumit has got to us today?
Yeah, a little surprised on Cummins. Although yes, I mean it's had a good run, some profit booking par for the course, and that club with whatever Somit has put out could see some profit booking. But I would actually be a buyer in Cummins, closer to 4,039.50 odd level. So a buy on decline setup. Genus Power also very interesting setup here. The base formation around 325 was rather strong. Volumes haven't really been through the roof, but the price action club with fairly decent volumes suggests that further upside to 355 and about 370 cannot be ruled out. Stop near 335. So yeah, Cummins and Genus Power, good moves. Cummins on declines and Genus Power as a continuation of this move could be an interesting stock to watch out for.
That's with regards to Cummins India. In fact, also let me get in Vineet Bulinchkar from Ventura Securities. Vineet, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit, and thank you for the patience and for waiting by. Overall, a good sentiment in terms of the markets right now. Bank Nifty, 10 or 11 consecutive sessions of up move that we are seeing. A good buying interest coming in the PSU banking space as well right now. We just spoke to Parag Thakkar some time back, and he's absolutely positive with regards to SBI and HDFC Bank. How are you looking at the banking and the financial names right now? And would you be a buyer? What would your top picks be?
So we are quite positive on the PSU banking space. We like Canara Bank, SBI. Obviously, you mentioned HDFC Bank, which is a perpetual buy for investors. So these are some of the stocks that we like, and the reason being, if you see, SBI is among the large caps, which has really not fallen as much as the index has done. So we think that SBI could be a massive outperformer going ahead from here, and SBI will also benefit from the stake sale in Yes Bank and the impending monetization of its subsidiaries. I think that's going to be a very strong one on the cards. So that's a top pick in the banking sector. And the Canara Bank is also going to see 2 of its subsidiaries list. So we expect some sizable upside going there too.
All right. The counter that has been the star of markets today is going to be Urban Company. What a stellar listing it has had. The listing gains of around 60% and currently also seeing gains of about that 66% and on that occasion I think we decided to do a bull versus bear on the segment so that investors can consider both of the aspects and then make a choice. In terms of the listing gains that we saw today, of course 60% plus a 6-7% more gain we've seen in the markets today, but with regards to where valuation stands, extremely expensive with regards to where valuations are concerned for something like an Urban Company, currently trading at 16 times price to sales. Generally, on an average, a platform company has valuations of around 8 to 9 times for price to sales, but this is trading at 16 times, so almost double of what generally platform companies trade at. So valuations looking very expensive. Secondly, in terms of where the financials are concerned, the company has achieved break-even in FY25, but the question really is whether it is sustainable and if this is a sustainable path to profitability or not. Of course, the management did come out and say that their core business is absolutely going to be running on profitable basis. The next one that we are talking about here is, we talked about the financials, but the next one is even in terms of revenue, it's grown over 38% YOY in FY25, but competition in this space is heating up. There are startups coming in which have got heavy funding, and that poses big competitive threat in terms of where Urban Company stands. Of course, right now, for this particular business, it's very much like where Eternal and Swiggy also started. So it's more or less like a duopoly or maybe three players in the particular space. But of course, competition is heating up. In terms of the SWOT analysis when we did here, the training skill development is a moat for Urban Company, and they always train their professional, their service providers or employees. But the idea here is that dependence on service professional is very high for them. So that is probably one of the threats, and because competition is also coming in, this could be one of the factors that they need to work on retention of their employees as well. Next, in terms of the cross-selling, this comes easy to them. This is what management said, that if a customer generally comes to Urban Company and takes one services, cross-selling for them becomes very easy and stickiness is very high for them. But on the other side, implementation of new offerings will be a key. They have recently launched Insta Help, and we'll have to see as to how quickly and how widely can they actually go ahead and implement this kind of service. In fact, we spoke to the management about all of these things, listening to what they had to say.
The success of this IPO and the way investors have showed faith is more a promise of the future rather than where the company is today. We recognize that we are still a very small company in the scheme of things, just about break-even last year, less than 1% of the entire home services industry. And, the onus is on us now to work hard, organize this industry, bring standards and quality control for customers, and also help hundreds of thousands of service professionals lead dignified, respectful, middle-class lives, and do it all in a way that it is sustainable, profitable.
After achieving break-even last year, the key is sustenance, and from sustenance it comes to growth. And that's what any investor would look at from a company which is just newly listed. What is that strategy going to look like in terms of sustenance first and then growth?
I think one of the things that we take very seriously is making sure that we disclose to investors very, very transparently and clearly how we are building this company and what is the picture as is. And I think that's something that we will continue to do. Bad news will always travel first to investors. Good news can wait, but bad news will always travel first. And we will try to be as thorough in our disclosures as possible so that investors can make judicious decisions going forward.
Okay, let's talk a bit about the numbers. Varun, I'll come to you on this. You're, of course, EBITDA break even. Do you see that pathway sustainable is the first question. And then what is the margin picture looking like going forward?
I think for the core business in India, we do believe it's already operating at a healthy margin. So if you see the whole of last year, we did about 3% odd as a percentage of net transaction value. And in the first quarter, we did about 4%. And in that quarter, we had not segregated Insta Help away from the core business, but we did disclose in our RHP that had it not been for Insta Help, it would have operated at about 5.2% adjusted EBITDA as a percentage of NTV. So it has been seeing a very healthy trend. It was loss-making 2-3 years back. As it has scaled, that operating leverage has transferred into profitability. And I think for the core business in India, given where it is, our goal will be to continue to operate it profitably. FY25, about 77% of the revenue came from India core services, 13% from international, and about 10% from native.
So that's with regards to Urban Company. Strong listing, 60% up move right now. Vineet, in spite of this initial listing day gains, would you still be a buyer, or would you wait for some bit of a correction? What is your view in terms of these new age tech companies, and where would you peg Urban Company as compared to peers? Because the valuations are slightly on the expensive side, and as Mahima was telling us, would you be with the bear case or the bull case at this point in time?
So, we were looking at about a 30% upside in the stock. The fact that it's gone up to 60% is not surprising because, it's a very unique proposition. And their ability to offer solutions and solve problems for, consumers at large, especially in the maintenance space, I think, they have got a very sticky business model, which is very difficult to replicate. So I think the market is giving it a premium on that.
Okay, so that's a interesting comment that's coming in as well, from Vineet in terms of where Urban Company goes. But Vineet, stay with us as we slip into a short break. Over the past decade, India's economy has undergone major changes, from tax reforms to digital payments and financial inclusion. As the country looks ahead, we take stock of the key moves, their impact, and the road still to travel under the leadership of Prime Minister Narendra Modi. Let's listen in.
मैं
नरेंद्र दामोदर दास मोदी ईश्वर की शपथ लेता हूं कि
When Narendra Modi became Prime Minister in 2014, he promised transformative changes. 10 years on, his government's reforms redrawn the India's financial maps from crackdown on the black money to digital payment revolution. Here's look at his big bold decision and unfinished agenda.
One of Prime Minister Modi's first moves, a special investigation team on black money. A Supreme Court directive the previous government never acted on. But the defining gamble came in 2016. Demonetization. Overnight, 86% of India's currency vanished. The aim? Crush black cash and counterfeits. The result? Chaos at banks, a short-term growth dip, but also a surge in digital payments, laying the foundation for today's cashless economy. In 2017, GST rewired India's messy indirect tax regime, collapsing 17 levies into one. Collections jumped from 45 lakh crore to 1.8 lakh crore in a decade. A GST 2.0 this year further simplified rates. Well, on direct tax front, corporate taxes were cut in 2019, making India more competitive but widening the fiscal gap. By 2025, the zero tax threshold rose to 12 lakh, easing compliance for millions. Banking cleanup was equally sweeping. The 2016 Insolvency Code forced bad loan resolutions, pulling NPAs down from 11.2% to 2.8%. Public banks recapitalized with 3 lakh crore, swung back to record profits. Financial inclusion scored. 56 crore Jan Dhan accounts opened and UPI exploded to 18.4 billion transactions a month, putting India on top of the global digital payments chart. The industry saw mixed results. The PLI scheme attracted 1.61 lakh crore in investment, but manufacturing share of GDP is still stuck at 17%. Asset monetization, leasing highways and infrastructure, all of this showed promise but lagged in execution. The pandemic tested the Prime Minister's fiscal caution. Relief packages and credit guarantees softened the blow, and by 2023, India was back as the world's fastest growing major economy.
In 11 years, Modi reforms has digitized, globalized and formalized Indian economies. But challenge remains on the dormant Jan Dhan accounts, tangled taxes and land labor bottlenecks. As the Prime Minister turns 75, the economic base is stronger than ever. However, the real test is now to deepen the gains and ensure sustained growth.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Welcome back. You're watching India Market Close on NDTV Profit. We still have Vineet Bulunchkar with us. Vineet, let's talk about few of the names which are buzzing from the large cap space. Tata Consumers, over 4% is the kind of up move that you're seeing in today's session. Would you still be a buyer? Because the gains are absolutely strong. The stock is at the day's highest levels right now. What, according to you, is working for it?
So, their new age verticals are growing very handsomely, and they're able to lift the overall rate of growth for the company. And, margin, maturity of the margin profile is also steepening. So I think that these are good prospects for the stock, and that's why it's going up.
Okay, would you be a buyer?
To be very honest, we have a sell call on this stock because it doesn't fit into our DCF modeling that we do, and we have a sell call with a target below 900 on this.
Sell call below, a target of 900 is what you're looking at on a Tata Consumer. In fact, let me get in Shivangi Sarda from Motilal Oswal as well. Shivangi, welcome to the show and a pleasure to speak to you as always. Few of the top movers in terms of today's session, if you have to look at the large cap space, Tata Consumers, little over 4%, SBI, BEL, Maruti, and a Kotak Mahindra Bank. Let's look at all the 5 names, the kind of green shoots that are emerging here, and the moves that you're seeing. Which would your topic be?
Good afternoon, Hiral. Thank you for having me. So we've seen that while the indices have, witnessed a good comeback, and I think buying interest emerged quite well. The put call ratio is, above 0.3 levels, which clearly indicates the comfort of the bulls, and Bank Nifty is trading above 55,500 marks. So overall, I think across board, buying can be seen, and the focus would be some of the banking, consumer, of course, has been seeing a good long build up over here as well. But the major focus would also shift on some of the selective IT names.
Okay. So you're saying select IT names is where you would be positive on. What names would that be?
So talking about the IT names, there has been a good movement because of the dollar index movement. So of course there has been a clear direct, impact on that. So some of the names like Coforge have, witnessed good amount of short covering move over here. Of course, it's a little down from its day's high levels, but looking quite positive. And apart from this, the banking stocks, especially the smaller banking name stocks, are looking quite well. Focus would be on the PSU names.
Okay, so that's with regards to the PSU banking space as well. In fact, Shivangi, anything that you would like as a call from the PSU banking space, what would your top strategies be?
So from the PSU name, of course, I'm liking PNB, which has given a fresh breakout with volume. The kind of surge that we've seen has been seen after a really long period of time, with Bank Nifty outperforming and finally trading above 55,500 will be a good trigger for this one to move. Of course, it's also surpassed its previous hurdle zones of 108 and now acting as a crucial support levels. So recommending a buy here with a target of 115 and a stop of 110 levels.
Okay, so Shivangi, that's with regards to where PNB comes in, and that becomes one of your top picks as well as we speak right now. But moving on, Vedanta is another stock that I want to discuss about with Vineet. Vineet, how are you looking at Vedanta? Because the stock is under pressure today. The hearing has been deferred to the 8th of October. This is the third time where NCLT has deferred the hearing. What would you advise investors to do with the Vedanta?
I think, if you try to time the, competition commission's hearings, it will be very difficult to gauge when it will actually happen. Because, in the case of some other stocks, we have seen government judgments being postponed for no apparent reasons. So usually I do have patience on this stock. I think there is a lot of value to be gained after the, the demergers happen. And currently, with the interest rate cuts impending in the US, I think commodities are going to be on a tear going ahead.
Okay. So that's with regards to where Vedanta goes. But moving on, some of the top newsmakers of the day. Let me head across to Vansh to tell us what's happening with the Aditya Birla Fashion, Mahindra Lifespace, and One MobiKwik. All of three buzzing either on the upside or a downside. Vansh, what is working for these companies and something which is not?
Well, yes. So let me start off with Aditya Birla Fashion first. Now, the company has launched its own brand called Owned. Now, this is a new brand name, new identity, and new contemporary that the company has laid out. And in fact, the company aims to accelerate its play in the value fashion category as well. And the company plans to convert the existing Style Up stores into owned outlets as well. Also, the company plans to expand its footprint to 100 stores by end of this financial year. And also, in terms of the guidance post this demerger, the company is expecting to triple its revenue in the next 5 years, and they're expecting EBITDA margins to expand to about 7% from the current loss-making margins, and they are also targeting 18% ROCE by FY30 as well. And lastly, they are also looking to open 250 stores every year. And they are also looking out for a franchise-owned stores by 70% plus franchise-owned stores by FY30 and 100,000 stores in small town as well. Second, we have Mahindra Lifespace. Now the company has been chosen for two society redevelopment project in Chembur in Mumbai. Now it's also important to note that this company realizes the revenue once the project has been completed and has been handed over to the client. Now the gross order value for these projects stands at about 1700 odd crores, and the two projects span for a total of 4.4 acres as well. Third on my list is One MobiKwik. Now the company has reported an incident involving unauthorized transactions. Now they have some registered merchants and users that have colluded to claim illegal settlements. The activities were identified in limited locations with Haryana, and the FIR has been filed for 40 odd crores, and the company has already recovered 14 crores, and the current estimated net impact, the current net loss impact would be about 26 odd crores. So these are some of the stocks that remain in focus.
Thank you so much for that, Vansh, for getting us the quick updates. In fact, Vineet, let me come to you. Aditya Birla Fashion, Mahindra Lifespace, firing on all engines. MobiKwik as well has a good run, but starts to see some bit of selling pressure. What would your advice be on these three counters?
I think, the Indian retail is going to do extremely well, and most of the, retail companies during Q1 have announced growth plans, and they're expecting growth also to pick up. So confidence comes to us that these sectors should also perform, and ABFRL is making the right noises. We think that these stocks can be accumulated. As far as MobiKwik is concerned, it's more of a buy on dips because we've seen some very large volumes, and the management has also guided to QOQ 30% growth with margins stabilizing around 35%. These are, good omens to hear from the management, and we think that the stock should do well going ahead.
That's One MobiKwik. The stock should do well going ahead. But let's quickly also address a few of the volume buzzers in trade today. I have my colleague Jasmeet who's standing by to tell us which are the stocks which are buzzing on volumes and good moves there. I think we don't have Jasmeet on that, but you have a KNR Construction. Strong moves in terms of today's session, 5% up move, volumes up almost 119 times its 30-day average. DCM Shriram is another one which is seeing good volumes. Sidhu Trade Link, Gujarat Fluoro, there was a block deal on that one as well as the Lux Industries, which is seeing good volumes. On the back of these volume buzzers, Shivangi, let me come to you. Would you recommend anything that comes to your radar from these names?
Of course, we've seen a good amount of volumes and price action here in today's trading session. But of course, these names have to sustain above these levels for a good sustainable up move. So I would recommend a little wait and watch here in these counters and some of the PSU names counter which are gaining attraction.
Okay, so those are the volume buzzers that you're looking at as well in terms of KNR Construction. That comes to Shivangi's timeline from here on. Apart from this, let me look at a few of the other names which are actually seeing some downtick. Bajaj, Finserv, ITC, both seeing cuts to the tune of little over 1%. Bajaj Finserv, SBI Life, HDFC Life also trading under pressure. So there is some bit of pressure in terms of life insurance companies. Vineet, your views on Bajaj Finserv and SBI Life and HDFC Life?
In my opinion, these blips are temporary. Once the GST rolls out, the 2.0, we will see some very strong demand for stocks from the insurance sector. And especially your health insurance should do well. I believe that, premiums might just increase and consumers might want to, pad up on the GST that they're saving up. So we will not only see good growth in terms of average premiums, but we'll also see number of policies also getting added. So growth factor should get a kick up here, and we remain buyers on declines.
As a part of our special coverage on PM Modi's 75th birthday, let's see how broader markets have performed during Prime Minister Narendra Modi's more than 11 years in office. Jasmeet brings us with all the insights on how broader markets have done.
Well, right, yes, thank you for that. Let's quickly understand how the Nifty mid-cap have done in this particular tenure of 11 years. Now, if you look at the mid-cap 150, the overall return they have given for the last 11 years is 333%. And if you annualize it over the annual return, the compounded growth, it's at 17.7%. Now, if you look at the top gainers in the stock who have performed really well, the starting off with Minda, which has given 18,000 odd % return over this tenure. Well, if you look at the compounded growth, it's at 60 odd %. While there are set of 5 companies, that's KEI, we have KPR, we also have APL and Solar Industry, which have given the compounded return in the range of 40 to 60 over the last 11 years. Let's quickly understand how have the small cap have performed altogether, the 250 small cap. If you look at the return from last 11 years, they are at 282% and compounded at annual level, they give a return of 14 odd %. And again, here the top gainer, that is Ola Electric, that's a green tech company. It has given a return of 14,000%. When you analyze it on yearly basis, it's at 56 odd %. If you look at the stocks, they have been ranging at from 44 up until 56% of annual return in the tenure of Shri Mr. Narendra Modi. So these are the stocks on broader market basis.
Okay, Darshmi, thank you so much for bringing us those details. Shivangi, quickly, your BTST ideas.
So, Mahima, my BTST idea would, of course, include a PSU named stock, which will be CNB. It has attracted a good amount of open interest, and we've seen that the stock has actually, had the tailwind of the Bank Nifty as well. 15 and the support of 109 levels.
Okay, all right. So that's with regards to where Shivangi's BTST is concerned. Shivangi, a lot of other names that have seen significant amount of gain from its day's low point. That includes something like DCM Shriram, India Pesticides, Red Tape, even Banco Products is seeing that kind of gains. Anything in particular that you're liking from this stack?
Of course, ECM Shriram has witnessed quite a lot of movement today, and we've seen a good amount of volumes adding up. The stock had been beaten down from the last many weeks, and we've seen a reversal here coming in and recouping half of its loss for the previous month. But of course, now it needs to hold above 1350 levels for the next leg of rally to continue in this one.
Okay, so that's with regards to DCM Shriram. But thank you, Shivangi, so much for joining us on the show and giving your views and your top trading bets as well. In fact, we also spoke to Samir Arora, founder and fund manager at Helios Capital, about his top sectoral bets. He remains bullish about financials, but remains worried about the IT sector. Let's quickly listen into what he had to say.
If you look at the 3 pools, one pool is financials. And the financials, which are dominated by the big banks, they have had a below 10% type of growth because of interest rate cut and NIM compression, which they themselves are saying, and everybody agrees that that is a matter of 1 or 2 quarters, that from next year, because this becomes stabilized and the interest rate cuts pass through to the deposits and all, that over time that NIM goes back. And generally the thumb rule is that the financial sector or the banking sector grows about 1.5% to 1.7% of GDP in nominal terms. So you will get back to that 14-15% growth. I'm only worried about the IT sector, but the IT sector today weight is about 10-15% because they are not going to grow 15% like or even higher than they used to grow in the past. Maybe they grow from 3% to 8%. So that compression will be there. But even the consumer sector now, whether it is one-off or it is catch-up or it is pent-up, but you're going to have a massive 1 or 2 months starting on whatever, 22nd.
Okay, so that's the view coming in with regards to where, Samir goes, and IT sector is what he's worried about. Vineet, what is your view with regards to IT?
I think you should get out of IT stocks the sooner the better. I think there is going to be a negative domino playing out in the US, and we expect that to, kind of have a very bad impact on the Indian IT service companies. So we are advising clients to book profits out here and get into domestic themes.
Advising clients to pay the domestic theme right now is Vineet's view. Vineet, thank you so much for taking out the time and giving us all those insights. Always a pleasure having you. All right, viewers, let's take a quick look as to how the markets are closing for the day. Well above 25,300, 30 points above that 25,300 levels for the Nifty 50, up 0.4%, almost 93 points of an uptick that we've seen in trade today. So well above that 25,250 mark that Hiral was talking about. So the momentum is expected to continue from here on. The Nifty Bank seeing gains of about 0.6%, outperforming the Nifty 50 as well, largely led by the PSU Bank. Let's also take a look at the Nifty 50 heat map, and that will tell us as to how stocks have performed. Tata Consumer leading the pack with 4% of gains, followed by something like an SBI, BEL, Maruti, Kotak Mahindra, Ultratech. So a lot of banking names combined with something like a Tata Consumer and some auto names doing well in trade today. Something like an Ultratech, Shriram Finance and Trent also seeing gains of about 1%. But something that's under pressure, Bajaj Finserv down 1%, Titan turned into red and down by about 1%. Hindalco down about 0.8%. ITC not riding that FMCG wave right now, down by about 0.8%, followed by HDFC Life, Eicher Motors and Tata Steel. Let's take a look at the advanced decline ratio, because that will tell us as to how broader markets have done throughout the day, and that entire chart has narrowed down. In terms of the advanced decline ratio, around 1400 odd advances versus that of 960 odd declines, which in fact started at 300. So declines, of course, have increased by the day, and the ratio is now almost 1.5:1, and that's where we are ending at. With regards to where the broader markets are concerned, the mid-cap 150, trading around 0.13% higher, so not as good as what the benchmarks have done. In terms of the small-cap 250, largely in line with how the Nifty 50 is done, up by about 0.5%. But some names in specific, BSE 500, let's try to pull that up and see what are the counters that have done really well. DCM Shriram, like we talked about, up 10%, LG Equipments up 6.7%, Kena Construction up 5%, Bank of Maharashtra with a gains of about 4%. Tata Consumer, a Nifty 50 name in that chart, quite an interesting one there as well. But something that's not done well today includes KIOCL down by about 5.5%, Aditya Birla Sun Life, Cohance Life, Borosil Renewables all down by about 2%. But most importantly, what to watch out for today post market hours, that will give you hints for tomorrow's markets. So the first thing and most important one, the FOMC interest rate decision, that will tell us whether the rate cut is coming in or not. In terms of corporate actions, these counters will be trading ex-dividend. That includes Jamna Auto, GMDC, Good Luck India and NLC India. In terms of some other names, Venus Pipe, Shakti Pumps, Quality Power Electricals, Hindustan Coppers are some names that will be trading ex-dividend. And in terms of stock split, there is Zydus Wellness that will see a stock split from 10 rupees to 2 rupees per share. So this is with regards to everything that you need to keep an eye on. But with that, we're completely out of time on this edition of India Market Close. But do stay tuned to NDTV Profit for more news and updates.
the best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Thanks for tuning into this very special broadcast. And at the point of time when the India-US relationship seems to be thawing, if I can use that term, and people would want to know about what is it that some of the biggest global voices will be thinking about this, about the reforms, GST reforms and others, and the markets ahead, particularly in a year when the Indian markets, contrary to the past, have moved sideways. You can't think of a bigger and a better voice than Christopher Wood, Global Head of Equity Strategy, Jefferies, Tamanna.
Absolutely, and we're pleased to welcome him on the conversation with us today. Chris, great to have you with us here on NDTV. Thank you so much for your time. You know, I'm recalling your comments, and because we started the conversation in the context of the India-US relationship on your last note, where you talk about, and you call it out quite clearly, that perhaps what President Trump is not too happy about is not getting credit, what he sees as credit, for solving India-Pakistan or the ceasefire. Do you think we've moved some miles away from there?
Well, yes, the sort of vibes suggest we've moved a bit beyond that. So I think it's perfectly understandable why people's expectations that some kind of deal can be agreed have improved. And there's got to be, I would say, a 50% chance that something's agreed in the next few weeks, months.
Wow. Chris, in which case, you couldn't have chosen a better time for your conference, right? I mean, what's the mood now? The mood maybe 4 weeks ago would have been different. The mood currently would be palpably positive.
Yeah, but this whole tariff thing has not really hit the stock market that badly, right? So I think because in the first instance, no major listed companies are impacted. But if I'm wrong and we have 50% tariffs still in a year's time, then clearly there's going to be a macroeconomic negative ramifications from these 50% tariffs. And I certainly would never have expected at the start of this year that India would be facing 50% tariffs.
That's actually, you're right, Chris, that's something that took everyone by surprise, which is why, are you also seeing this thaw with a bit of a question mark? Let's see where this pans out. Or to your mind, 50% on tariffs on India is not something that's sustainable or feasible at all?
Well, to me, the base case is that it'll be relaxed by the year end. But if the demands from the US remain that India open up agriculture, then I don't believe there's going to be a deal. And if the demands remain that India stop buying Russian oil, then I don't think there's going to be a deal. But there is a potential for India to reduce buying of Russian oil simply because the price differential with world oil reduces. But that's a different thing from being ordered to stop buying Russian oil by the US.
Yeah, I think you hit the nail on the head. Ordered is the key word in that sentence. If I were to ask you very clearly and simply, what is worrying global investors right now when they look at India? Is it the 50% tariffs or is there something more?
No, it's not. I don't think it's the 50% tariffs. This is a year where clearly the FIIs have record low ownership in India. Our base case is that the Indian market is currently trading sideways. because we've got a situation where the market's supported by the incredibly impressive continuing domestic inflows into the mutual fund industry. And those inflows are helping to absorb the other feature of the Indian market right now, which is supply from the corporates, as corporates take advantage of the high valuations. So this supply is being absorbed by the mutual fund flows, and essentially India has been trading sideways. And I view this year as a year of healthy consolidation in the Indian stock market. And I'm hoping next year we see a pickup in earnings growth driven by a pickup in nominal GDP growth, which will allow the Indian market to do better. But we still have this question of relatively high valuations in the emerging market context, and we have the ongoing issue of equity supply.
So, Chris, maybe in the last 3 months, culminating into this conference, what is the most asked question to you from investors who read your notes or who've come to the conference to hear you?
Well, are you asking about foreign investors or from a foreign investor standpoint? Yeah, India is not being flavor of the month because one reason India has basically been trading sideways, but clearly India has been a big underperformer in the emerging market context, and that's simply because other markets have done well. So a year ago, China put in a major bottom, and definitely foreign investors. Fourth quarter last year, first quarter, I'm talking calendar year, first quarter this calendar year, foreign investors were selling India to fund increased investments in China. And that has made sense because China put in a major bottom a year ago at about 7-8 times earnings. More recently, the foreigners have been selling India to fund increased positions in Korea. Korea's done very well this year, and foreigners had to play catch up. And they've also been having to put money back into Taiwan. I'm talking about emerging market investors because Taiwan is the same trade as the US stock market running on the AI CapEx theme. So to me, the chances of foreigners returning to India grow as we get near to the end of this calendar year, because hopefully we will start to see evidence of a pickup in growth caused by the various policy easing seen this year, be it RBI easing or be it the GST cuts. And clearly one positive spin-off of this US tariff situation is it accelerated the simplification of GST and the cuts in the GST